Good morning, friends. I hope you all are having an amazing day so far. Welcome back to Stocks with Ronnie. In today's video, we're just going to be doing more of what we did the other day, last week. We're going to be talking stocks. We're going to be talking about this crazy market that we're seeing right now and just diving deep into trying to find new undervalued companies, charting up some stocks, charting the markets, talking about what's going on in these markets. Is Trump off his rocker? I think we already kind of know the answer to that a little bit. And what's really going on overall in the markets. We have some economic data, not today, but tomorrow. Tomorrow, we have some economic data. We have GDP growth coming. So that's going to be a big one. It's expected 4.3%. Prior was 3.8%. This is like the big knockout, like, hey, we need GDP to be strong. We expect it to be strong. And if it's not, then that's definitely going to be saying something of the overall economy. If it is strong, it's a double-edged sword. If it's too strong, then people could get scared about inflation, spinning back up, so on and so forth. You also have core PCE coming out, personal income month over month, and personal spending month over month. So a lot of things coming out tomorrow. Obviously, yesterday, we'll just start off with this. Yesterday was a crazy, crazy day. We dropped hard, off the Greenland news and respinning up tariff getting stuff. And we dropped hard. And then it seemed like, wow, we might go red to green today. I was watching it and I was like, dang, we might go red to green today. And that's super strong. And then all it really was an early morning to mid to afternoon pop. And then it just sold off the rest of the day, like afternoon, bad, to where the QQQ went back to its days of day low. The SPY actually went lower than its day low, but then the IWM small caps went, basically it ended right between low of day and high of day, so it didn't get as beat up. And that kind of matches with what we've been seeing, or what I've been seeing. I've been seeing that small caps are really catching a bid. I've been seeing that you might be seeing some rotation into small caps, mid caps. You have interest rates supposedly supposed to continue to come down in 2026. And when those things happen, when you get in cutting cycles, typically people go more risk on. And within that, you've been seeing these themes of drones, space, defense, materials, all, have huge gains year to date. If you look at like the biggest year to date winners, it's all in those themes: space, defense, drones, materials. Not even like robotics or anything like that. It's all in like those four themes pretty much. And some other things, I guess. You could talk about some industrials. But if you want like the biggest returns, then yeah, it's in those areas. But yeah, overbrink. Yeah, I was late. Yeah, I was late. My kid was crying at the door and banging on it, and I was like, bro, like right now, like I'm about to go live. I get it. Love you. We gotta bang on the door later. We'll hang out later. All right. Dad's gotta work. You're fired. I'm sorry. Oscar down 4% already. My bad, 5%. All right, let's check out Oscar. Let's pull up the screen here. See what's going on with good old Oscar. Now, Oscar jumps and dumps and jumps and dumps consistently, guys. It's all around this ACA subsidies news. It's going to stay that way until we just get past it. We do have earnings coming up here in a couple weeks. That's going to be big for the company. I think they're going to come out and do solid work. Man, now who's the liar? It's only down 3%. Not 5%. But yeah, it did bounce here. So last day or today down 3%, not 4%. 12% last 5 days. We're up on a monthly basis. We're up on a 6-month basis. We're up on a year-to-date basis. So still doing okay for 2026, I guess. Yeah, let's see what markets are doing, huh? Let's go back to markets. So markets were up. Okay, and they're still up. So you're seeing the SPY, SP 500, 0.5%, NASDAQ, 0.25%, Dow, 0.5%, and small caps, again, almost 1% up. So you're seeing across the board, what are you seeing? You're seeing that small caps remain the strongest out of all of these companies, or sorry, out of all these indexes. Good morning, Ronnie. What's up, Ty? Poor little pup. Yeah. He loves his daddy, and yeah, I can't fault him for that. What's your expectation for Mobileye? Are you talking about like what's my expectation for earnings or just overall? Overall, I think it's really undervalued, and I think it's priced for the dump, for the garbage bin. And I don't see that in the numbers, and I don't see that where we're going going forward. So that's, I guess, my quick opinion on it. But how are you guys? Are you guys doing great? Did you have a great morning? Did you survive yesterday's meltdown of a market? I know it was pretty crazy, but we got through it. We got through it, and we're here. I would say, as your friend, I would say probably today with the bounce, it's a good time, if you haven't already, to raise some cash. 15 to 30% is like the benchmark, I would say, raising cash for your investing portfolio. And if you're trading right now, it'd be a good time to get out of some trades that aren't working out, you break even on, you don't feel great about, because I don't think yesterday was gonna be the end of the sell-off, guys. I don't. It was a big sell-off, and it was very, very weak. And when you have those, you can have these bounce backs, but like that much selling, that much weakness, near all-time highs, with Japanese bonds flying off the handle, with more indecision, with more uncertainty around Supreme Court stuff, around Greenland, around new age tariffs, around XYZ, guys. I can go on and on. Government possibly shutting down again here in 10 days. No one knowing what earnings is going to have for us. Not trying to spread doom and gloom. I'm just saying the market, I think, fired a warning shot yesterday, and you should perk up your ears and listen. I really am not holding like any trades right now. I have 15 to 30% cash for the most part across all my investing portfolios, and I'm ready for a dip. If we don't get the dip, then cool. I have 15 to 30% cash, and I'm still majority invested in the market. So it is what it is. Cash is a position. People don't realize this. Cash is a position, and it's a very important position once you get extended, once you get to all-time highs, once you get what we're starting to see. And I was talking about this yesterday. I've been talking about this for like since October, basically. Because if you notice, since October what? Since October what? Since October, right here. Not on small cap, sorry. Look at this. Since October, right here, up. Let's see, down, up, down, up, down, up. Look, you're just like, this is like a box right here. It's like a box. It'll be easier if I show you. Good morning, Ronnie. What's up, JD? Hope you're having a great day, man. All right. Look at this. Since October, it's October 20th. You can go back to basically beginning of October. Where have we gone? Where have we gone? Where have we gone? We've gone nowhere. We've gone nowhere, friends. We're literally this is October 27th. So we're below October 27th highs. We're above, October 6th highs, but we've gone nowhere. We're just consolidating. What happened last time? We just went nowhere for a little while and consolidated. Well, I'll tell you. Back in December till about March, consolidation and dumpidation. And basically tariffs, uncertainty, tariff-geddon, where he announced like hundreds of percent of tariffs on everybody. And then we go back a little bit more, and before the bear market, hello, Ronnie. Greetings from Spain, my friend. So happy to have you live. Yes, hiding pickles. That's a funny username, man. Hiding pickles. Love it. My kid, whenever he likes to call people inanimate objects or animals. So it'd be like, I think he got it from his pat. His pat would be like, "You're a pickle." And he's like, "Oh no, I'm not a pickle. You're a pickle." And then, "You're a turkey." "No, I'm not a turkey. You're a turkey," and so on and so forth. So he loves he loves to just be like silly like that. But awesome username. Welcome from Spain, my friend. Happy to have you. So another time that we've had this consolidation and basically went nowhere was from August 2021 until January 2022. And you see, if you notice something, it's always like end of year and the beginning of new year. End of year and the beginning of new year. End of year and the beginning of new year. Over and over and over again. And here we are again, end of year and the beginning of new year. Consolidation after a big run up. Consolidation after a big run up. Consolidation after a big run up. And we're here consolidating. And then what happened? Well, bear market hit. The bear market of 2022 hit and we dropped a ton. How much in total? Let's find out. We dropped a total of 27.66% on the Qs. SPY. So this is what I'm seeing. This is what I do not like. And when we look at my indicators, we can see that when we got to this point, we had crossed down and then tried to cross back up, couldn't, and then fell. And this is the matrix indicator, by the way. This is something I created to help me track momentum. This is the flow indicator to help me track momentum with volume. And this is the temperature, which kind of does what both of them do, just not as great, but I still like it for some things. So here, before Tariff-geddon, what do we have? You had a big run, and then you had a bearish cross, and then you tried to cross back up. Oh, we're going back bullish. No, we didn't. And we stayed under, and that's when we fell. And then same thing's happening here. We crossed bearish after extension, try to cross back up, and now we're rolling back over. And now I think we come down here, and then we get this pullback or correction. It's what I honestly think. Does that mean that's what's going to happen? No. I'm not an oracle. I don't know exactly what's going to happen in the market. Nobody does. But I look at my indicators. I trust my indicators. I trust them with investing. I trust them with trading. I trust them with overall markets to help me identify what cycle we're in. And right now, it seems like we're towards the end of the cycle just because of where we are in the matrix, where we are on the flow. Do you see how we're barely scraping red here and here, right? When we flipped that, we went deep. When we flipped that, we went deep. When we flipped this bear market, we went really deep, right? So, and I call this a washout, 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 right? Sure, here's some times where it didn't go deep, right? And it came down to 21 EMA and we bounced. But again, that didn't come after this consolidation point. You have to take in everything into consideration. So right now, we're below the zero line on the temperature as well, below here, remain below here, even though we're going up, but really sideways. And the same thing happened here, and then we fell. Same thing happened here, and we fell, right? And then here, fell, and then these little two for the pullbacks. But again, these don't look like little pullbacks. Again, we're consolidating. In the past, what is that, 5 years? 1, 2, 3 consolidation points at the tops. The other 2 have been warning signs for we're gonna dump. So we'll see. This time could be different. It could be different that this time we're getting this consolidation period at the top and we don't dump, but I don't know. I don't know, guys. All right. Hello, Ronnie. Thank you for amazing videos. This is my first live I can join in. A big hug from Italy. What's up? I'll give you a virtual hug right back. Hope you're having an amazing time. Thanks for tuning in. I'm glad you could be here, friend. We need Zeta's 50 and 200 SMA to come back to the golden cross. Been pretty bearish since the death cross. We do have big support line at 1952. I mean, basically what I'm seeing with, potential market pullback here or correction, I'm okay. I'm okay. I want more leaps. Honestly, I want more leaps. So I'm okay if Zeta wants to come back. Now, I'll just say this as well though. You are not going to get Zeta to come back more than what it already has unless we get some sort of pullback correction. Just to be totally honest. You have this beautiful cup and handle, consolidation, breakout, now retesting that consolidation point. You still have this bull trigger. You have this nice volume shelf right here. You had a small flush out. Now you're flipping on the flow. You're flipping up on the matrix. Yes, it's curling down a little bit. That's from this little sell-off. But it's still overall in this direction after coming down into the sweet spot. So yeah, and you came right down to the 21 EMA. So right here, right now, this is where you're gonna bounce. You have earnings coming up in like a few weeks. You have earnings coming up February 19th. Yeah. So next month, I guess. But you have earnings coming up. That could be a catalyst. The stock is red hot. It's severely undervalued. Anything under $30 is undervalued. Yeah. So in my opinion, and based on the charts and based on what I'm seeing, the next move is going to be up as long as there's no pullback or correction, which I do believe, as after I just showed you, there actually will be a pullback or correction. So where would I think Zeta would go from there? Well, I think Zeta would come down to like this $15 to $16 range, and that would be pretty strong support. Now, if we have more than that, then who knows? Who knows, guys? Cheap can always get cheaper with a pullback or correction. I'm here for it though. I have so much conviction in this company. I have so much conviction in Oscar. I have so much conviction in Mobileye that okay, let them come down more. I know people don't like that, but I like it. I like it because I want these companies even cheaper. I want to build out more position. You know, it's basically like I raise cash and then I want them to pull back and then can get in more. I raise more cash and no, I haven't raised cash with those specific companies. I've raised cash with other companies that have absolutely flown that we've called out, like FLNC. We called this one out at $10. Now it's at 20 some dollars, hit a high of 28. We called out Onto down here at like 88, 90 range. It ran all the way up to like 222. So these are the companies I've been trimming here into this resistance, into this resistance. I've been trimming these companies into this resistance and taking gains and bringing down my portfolio position sizing because they were getting too big from where I initially got in them at. So, yeah, taking those gains and I love to redeploy them into, Zeta, Mobileye, Oscar, if they choose to come down more. ONDS is crazy, but I wouldn't touch this one, honestly. I just think, I don't know what I think. We're sitting at a lot of resistance here. Wicked off this resistance multiple times. It's been a high flying stock for, since May, just absolutely rocketing higher. And, the fundamentals don't really back it up yet, to be totally honest. But yeah, I understand they have a lot of contracts. I like the company, don't get me wrong. But yeah, if you get a pullback or correction, like these things are going to get hit hard. Thoughts about Up? Up. I think Up is sitting here at strong support and you're curling up. You had a flush out and you're curling up on the flow. You're curling up on the matrix. You're about to get a flip of the zero line. You launch off this volume shelf, fill this gap right here, and now you're running into this resistance here on this volume shelf, and you're running into and rejected the 21 EMA. So you really are going to have to break over this 21 EMA at 121 to run up and fill this next gap to about 160 to 177, and then hit this resistance here at 220, and then another resistance at 286. That's what I think. But again, this will come down here hard if correction or pullback happens. So, yeah. I don't really like any trades right now, to be totally honest. There's a lot of things that are really set up. Like I was talking about Quantum, and I was calling for Quantum to have a big move. And we got a big we didn't even get a big move, but we made a decent bit of money on our options and stuff. But yeah, it just looks ready to, it's consolidating here. It looks ready to shoot up and blow up higher. But, again, if there's a market correction, market pullback, I don't know. Curious to hear your thoughts on RDW. I really like RDW. I called this one out with the themes earlier in the year in our community. It's just been a monster. It's been a monster off this support area down here. Hit this support multiple times, held it, and then it just started to go. Flushed out down here. Flushed out, curled up, flushed out, sweet spot, made a bullish cross, and then it's just been going. But what are we seeing? Well, we're seeing some rejection here, right here at this resistance area. You see that? 1, 2, 3, 4 touches basically. You're hitting this resistance. because this is still in a downtrend, by the way. Still in a downtrend. Still in a downtrend. Getting tighter, but still in a downtrend. So it's really got to break over like 13 bucks, I would say, to really get going. And to say, okay, it's really broken out. And if it breaks over this, don't chase it. Wait for this little pullback here, and then wait for it to curl up like that, and then you enter, and then you get this move. Breakout, retest higher. Get in on the retest or the retest bounce, I should say. RR. RR is a funny one. Very, very volatile name. You kind of got a cup and handle pattern here going, and you had a overdone retest here, and actually you could draw it like this, and then that's a handle, or you could have a handle here. If you break out over like 737, then yeah, this thing's gonna absolutely go. It's gonna go big, up to like 14. So, hi everyone. Sorry I'm late. How dare you be late? You know better. I'm just kidding. What's up, friend? Glad you're here. Mobileye is starting to build momentum, especially pushing towards Golden Cross on 6-minute chart. What's up, Hunter? Glad you're here from Twitch. Love seeing people from Twitch over there. Join the community. Mobileye. Yeah, I mean, Mobileye. Do I stream daily? No, I don't stream daily, but I am getting into streaming about 3 to 4 times a week. So, yeah. 6 month chart. 6-month chart? Is that what you're saying? Just trading, Hunter? No, we do. I talk about markets. I talk about everything going on in the markets, going like no game reactions. No. I don't do games. No, we're just doing trades, trades, investing, talking about stock market, nerding out. What's up, William? Glad you got the streams hustling. Yeah, man. Appreciate it, man. Hope you're doing good. Hope you're doing good, brother. Yeah, 6-month chart. It doesn't look good. Just down on Mobileye. But again, if you just look at this thing, like this is like there's nothing over here. So you are literally at your all-time low area. Like this is your all-time lows right here. This is your like line in the sand between 10 and like 13 bucks. Bro, I do make PFPS banners, emotes, screens. All right, appreciate it, man. Yeah, so 10 to 1260 is like your what? It's your resistance or it's your support. Held here, holding here. Now, does it continue to hold? We don't know. But it's like one of those things that to me, one, it's undervalued, two, it's misunderstood, and three, it's a key support, and you could see this move higher. And you're starting to see things curl up here and things curl up here. So I like it. I like it a lot. What else? You know, somebody did something the other day and they were like, what was it? They looked at the QQQ on a daily. I saw this on I saw this on X yesterday. They went in here and they basically said, okay, yeah, you consolidated up, down, up, down, up, down, down. And they took this and then they copied and pasted it over here. Wow. All right. So it is real. You draw this exact move that you had here. So down to the up, to the down, to the up, to the down, to the up, and then you fall off a cliff. Consolidation, and now you're seeing the same thing here. That's crazy. That's wild. Paper gains, yeah, paper gains. Yeah, I think I saw it on his. I think I saw it on what's his name? He's like Bob's Burgers guy. Oh man, I can't remember his name. He has Teddy. Yeah, his like name's like Teddy or something. If you ever seen Bob's Burgers, Teddy on Bob's Burgers, he has like his face as his profile picture or whatever. Yeah, I think I saw him do it too. But yeah, again, I'm not trying to scare anybody. It's just like I'd rather be honest with you. I'd rather really tell you like what I'm seeing. What I'm seeing is no bueno. It's just not good what I'm seeing. So look at this. Okay. And then you had a fake breakout, and then you dumped afterwards. Okay. Use this. Fake breakout, dump. Do. Fake breakout, dump. You've broken down just like you did here. Now, what's very important here is as long as you hold the 21 EMA, you're probably good. But again, let's go back to the indicators that have been my indicators that I know have been very, very consistently accurate. Saying you need to get a flush out here. It's saying, nope, we are not crossing up. We're actually just riding this and then possibly this, more likely this, just like here. So I mean, the proof is in the pudding, guys. If we look at let's look at a daily. Let's look at a daily. Let's change this up a bit. Even if you take this, let's see. Move that there. There you go. So you had this uptrend since the pullback in November. Okay, held it, and now we broke. Now we could be coming up now today to like retest this thing, right? And then fall lower. Possibly. But again, just what I'm seeing, just don't like what I'm seeing. What questions you guys got? Should we do some fundamental analysis? Look at fundamentals instead of just charts? Can do that too. Pull up value snapshot. Can look at how does Zeta's chart look? Yeah, we put that one up earlier. It looks solid, man. It really does. What I was saying earlier was you're getting this reacceleration. You're getting this curl up on the matrix after coming down into the sweet spot. Yeah, this volume shelf. You hit resistance here, and that's why you rejected. But cup and handle pattern, you came down, retested, came down, touched the 21 EMA, and now is like that area. It's that area where you should bounce. You should be bouncing here soon, and then us pushing up into 30, as long as there's no pullback or correction. If there is, then I think, 15, 16 range is possible again, which I'll just be adding leaps there. Also, fundamental analysis of PGY would be cool. It's been getting some FinX hype. Yeah, I've noticed that. So funny thing is I've been in Pagaya since like middle of last year or so. I can't remember exactly, but yeah, we found this stock middle of last year. Talked about it. It's a gem in our gems portfolio right now. It's a sub $10 billion market cap company that we really, really like for the long term. And I'll show you some things why. Why do we really like it? Well, if you look at a quarterly chart on profit margins, you can see that our net margins, operating margins, and free cash flow margins every single quarter are pretty much up and away. Had a little bit of blip here for 3 quarters, but the overall trend is what? Up and to the right. Revenue and net income up and to the right, just flip to profitability. Gross operating margin and profit up and to the right. EBITDA up and to the right, had one bad quarter. Cash flows up and to the right. Let's see. Cash to debt, just because it's in that, loan space, it's higher. But overall, total assets to total liabilities and shares equities is solid. Shares outstanding, definitely, climbing up a lot. Don't love that. Earnings per share, like I talked about, flipping. And then, yeah. And we're here on the here on valuesnapshot.io, if you were wondering. Let's go to the valuation. This is where Pagaya gets really, really fun, honestly. Come down here. We can run a DCF EPS, rule of 40, PEG ratio. We can compare all 4 of these models. We can see like a quick little snapshot. Pagaya Technologies is a pioneering financial technology company based in Tel Aviv with a strategic presence in the U.S. and the Cayman Islands. Focused on consumer credit market, Pagaya leverages advanced artificial intelligence and machine learning to optimize investment strategies, increase yield, and effectively manage risk. With their robust data analytics capabilities, the company distinguishes itself in the fintech landscape, providing tailored solutions that meet the dynamic requirements of institutional investors while achieving outstanding asset management performance. $1.68 billion market cap, super small company. Enterprise value is $2.23 billion, which is always great to see market cap lower than enterprise value because you just already know you're getting a deal right off the bat. Revenue at $1.22 billion is almost as much as our market cap. They just need to make more cash money with with that revenue. So let's talk about DCF model. AC, what's up, Ronnie? What is your view? Why Grab has a pullback from highs, just normal pullback, or some problems you see? We talked about this last stream last week, and I'll show you in a minute, but their free cash flow margins absolutely fell off a cliff. And I think investors are worried because like they're not a profitable company and those free cash flow margins fell off a cliff. So it's like if you're valuing on free cash flow, then I don't know. That's not great. That's not great. Well, I got you guys here. Like the video so more people can see this content, see these lives. Really my only way to get out to more people and to make more friends on social media is for you to like it, share it, and subscribe, follow for more. So I appreciate if you guys do that. And yeah, appreciate you guys. So thanks, Purdy. Love seeing you here, man. Trailing 12-month revenue, 1.2 billion, like we just talked about. Revenue growth rate of 32%. We can drop that down to like 25% just to be conservative. Free cash flow margins, keep it at 14%. Keep this at a 20 terminal value. Well, their current's 10. So let's just drop it down to 10. Holy moly. All right, I need to be more conservative. So trailing 12-month, they did 14% free cash flow revenue or free cash flow margins. Let's just say they do 7. So And let's say they grow only at 20%. Now you see this. Last 3 years, 32%. Last year, they grew 30%. Let's say they only grow 20%. That's super conservative. That's trimming 10% off what they're doing right now. Free cash flow margins, they just hit 14%. And then before that, they were doing like 4%. Let's not take 14%. Let's not take 4%. Let's do 7. Again, very conservative. Their current price to free cash flow and their terminal free cash flow right now is 10. So let's do that. Even though they're growing 20% plus, that honestly requires like a 20 plus free cash flow yield or terminal free cash flow. But we'll keep it at 10. And then we'll keep our discount rate at 10%. And there you go. You are 29, you're 30% undervalued. The intrinsic value of this company is $27, and the current price is $20.87. But, what's up, Pinball? We rise as one, we fall as one. No doubt, brother, no doubt. So, Pagaya, you see that. You are 30% undervalued on like very, very, very beat up numbers. Now let's do actual numbers. Let's do actual numbers, okay? Let's go over to Seeking Alpha. Let's check out. Let's check out analysts' targets. So they have them growing 27, 15, 13. Okay, so we were actually in line with the revenue growth rate. It should actually be like 15. So we'll do 15. And let's actually say they actually keep doing what they're doing right now with a 14%. No, I haven't looked at eToro yet. But I've been hearing a lot about it, and people have been screaming that it's undervalued. I'll take a look at that next. Just finished Trump's Davos speech, bullish. I'll have to check that one out. What's up, Dirty RCS? Everyone now talking about eToro. Yeah, I've been hearing more and more about it. Same thing with Pagaya. Out of nowhere, everybody started talking about this company again. And that's probably why it's up today, 3%. So Zeta's up 1.65%. The only bad performing stock we got is Oscar and Adore, and Path is like mixed. Our market's overall doing. Market's up big. Okay, 1.32% on IWM, NASDAQ, SPY, all up almost 1%. So we're seeing a big bounce back days from yesterday, which is big for the markets. Key things to look out for now. It can't have another second half a day sell off. If we have another second half a day sell off, that's not good at all. If tomorrow we come back and we're Red Dead Redemption again, that's not good. So you got to have this, and then you got to build off of it. So Pagaya, let's say 15%. Let's say they do this 14% free cash flow margin, and then let's give them a 15 for 15. Okay, no, just keep that at 10 because holy, 115% undervalued. And you see, like, you punch in all these different numbers in here, all these different projections in valuesnapshot.io. You punch in all these different valuations and projections on DCF, and you just get really sexy numbers. I mean, it's crazy. It's crazy what they're doing. You know, they dropped down to 10% revenue growth rate, kept it at 10 free cash flow margins. You're still 26% undervalued. So when you get real conservative on this company, you're seeing very undervalued numbers. Now let's just say they do 15%. Let's say they hold that 14%. Let's say they expand that 14% into, like, over the next 5 years. Remember, this 5 years. So they expand it to an average of 20% free cash flow margin rate. They get a respectable 20 terminal cash. No, you know what? It's in the fintech space. Keep it at 15. And holy, I want to say, holy crap. Holy crap, guys. Like, this is why I like this company. This is why I like the numbers. This is why I like what I'm seeing here. And if we look at the chart, you're really going to like this. So Pagaya formed this base here and then broke out all the hype in 2025. Then it comes back, no more hype, comes back down to retest the breakout, the base breakout, retest the base breakout. Now consolidate on top of the base breakout. When you consolidate, you either like, I mean, this is such an obvious statement, but you know, we have a wide spread of viewers. Okay, so don't beat me up and be like, "Ooh, no crap." When you consolidate, you are either going to break up or you're going to break down. Again, I get that super simple, but again, we have a wide array of viewers, so like, come on. Consolidation leads to expansion in one way or another. Okay, so what's more likely in my mind? The matrix is down here in the sweet spot. The flow is down here in the sweet spot and got flushed out and now starting to curl up. You had a big base breakout. You had a retest of the base. And now what? To me, if you get over the 21 EMA, then yeah, you're going to see $46 again. As we were just talking about, that's $86. You cut that in half though. Let's just say, I don't know. I think if we do that, I'll probably get there. Yeah. So $43 with only 10% free cash flow margin rates, you're getting to 46. You're getting to 46. So yeah. I really like it. It looks like it's gonna go that way. Again, pullback correction, cheap can always get cheaper, and pullback correction probably takes us down back into this area in here, like 10, I'd say like 13 to 17 range. Yeah, this is why you DCA. This is why you don't like go all in right here, because if it comes down here and you don't have any cash to buy in more, then that sucks. But yeah, I like it. It's undervalued. I like it a lot. Let's see. It's my main brokerage. It's decent. All right. We'll take decent on eToro. Let's see. eToro. Yeah, I mean on a weekly chart, also since it's only been around since May, it's just a falling knife. It's a falling knife here too. Literally, it's in no man's land. There's no support, no nothing. So this doesn't meet my direction criteria of my 3Ds, discovery, data, direction. This definitely doesn't meet the direction point because I mean, it's just a falling knife. So I'd wait until you get some support created first, which is very important before you start diving into this name. Even if the fundamentals are there, right? No one likes catching a falling knife. What do you think about Adobe and Odd? I think Adobe is very undervalued. It's a trailing 12 month. I mean, your margins continue to increase, your revenue continuing to increase, your net income continuing to increase, gross and operating profit, EBITDA, cash flows, shares outstanding are coming down still, EPS expanding, revenue per share is expanding, free cash flow per share is expanding, return on assets expanding, return on equity expanding, price to book ratio declining. Okay, and look at EPS for this company, Adobe. Yeah, it's just so beaten up. So 2094 is what they did here. EPS growth rate, I'd probably put them at like 12% over the next 5 years. Target multiple, they're currently at 17. I think they should get back to a 20 multiple, which is fair. And yeah, there you go. Undervalued. 57%, 58% undervalued. Current price $290. Fair value $458. 5-year target 738. Gives you a 20.5% compounding annual growth rate. The SP 500 gives you 8 to 10% back on average per year. So you're crushing the markets, absolutely crushing the markets. As long as you don't think Adobe's going to die, which I don't think they're going to die. They're more for the professional. They're not as much so for the consumer, but they are reaching more consumers now due to like AI credits and their integration with other AI companies like Gemini and LLMs like ChatGPT, and right, they're integrating those in, and then they're getting paid based off tokenization. So it's great. It's great, honestly. The chart is what you would expect. It's a dumpster fire. But switch this to a monthly. Draw a pretty little box. Okay. Over the last 6-7 years, when would you want to be buying Adobe? Here, 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 or here, and here, and here? I want to buy here, here, and here. Right? That's what I want to buy. So people don't want to buy because it's down, and people think simplistically like, oh, LLMs, AI, Adobe's going to die. Adobe's going to die because AI is going to eat their lunch. Well, they don't actually think through that. They don't think more into it. They just rattle off a one-liner and then say, okay, I'm just going to go invest in a company that doesn't make any revenue, doesn't make any net income, that's a cash burn, but it could 10x. Okay. Well, while I'm buying leaps down here on Adobe, and then eventually Adobe gets back up to like $400, $500, $600, and these leaps are now worth a shit ton of money, and then you invested in a company that has zero revenue, is a cash burn, and it didn't work out, or a bear market hits and they just get cratered and go to zero. Okay. Dead cat bounce. I don't think we personally, after hearing no force to take Greenland, just want a deal for his golden dome. Maybe, yeah. Wow, Pagaya seems undervalued. Donald Trump, Davos, money, stocks, undervalued. Hey, Ronnie, do you invest in speculative assets with no cash flow like Oklo, or do you mostly trade those names? I'll invest in anything if it fits my like understanding, my circle of competence. I'm invested, like, let me give you the example. I'm invested in a door right here. A door is, you see this, 4.62 million net income loss, $87,000 in revenue. But what Adore is doing is they're I really like their mission. They're recycling trash and making it into energy. So I really like their mission for the environment, and I really like their mission overall as a company. And I think that I understand where they're going and I understand the story behind it. I have to understand the story if the fundamentals aren't there. I have to see this. I have to see the story turn into hard dollars. If I can't, and I'm not confident about it, then no, I can't invest in it. Oklo, I do see the story. But with these speculative names as well, like I limit the amount of capital that I put into them in my portfolios. I put way small. I put a lot. I put way less money into these speculative companies like this because you just don't know. You just don't know, obviously. So yeah, I'll invest in them. But I typically trade them more. Yeah, something like Oklo, you know, it could work out, it could not. You know what I mean? Like it could really not. They have 0 revenue. So the thing with Oklo is like a lot of their stuff isn't like proven yet or anything, and they don't have any material, you know what I mean? Like places yet. So they're trying to build them. They're working on it, but it's not there yet. So I just don't know. Hi from Belgium. What's up, friend? Which stock is he reviewing? I looked at Pagaya, PGY, and Adobe. Oscar is over. Sure. Okay. Yeah, it's over. Yep. I guess I'm just gonna sell out all Oscar, guys. This guy said Oscar's over, so guess I'll just sell out. Oh well. UMAC up nearly 8% after Trump's Russian-Ukraine talk today. Maybe overall, it's only up 2%. UMAC looks good. It's breaking out of this base. So yeah, it could be a monster here. We could have a monster on our hands on UMAC. Our matrix is curling up out of the sweet spot, made a bullish cross, continuing higher. The flow curled up after the flush out and moving higher. You got a bullish trigger down here at about 15 bucks. Now it's at 19. Profit target's about $30.65. Ronnie, man, you're still in touch with Amit? Yeah, we talk sometimes. SPY 700 incoming. Adobe could fail because of AI easily. I don't think it's that easy. What is iMac? I don't know what iMac is. Hello, Ronnie. What is your take about Oscar at current levels? Guys, yeah, I mean, Oscar, guys, it's just, it's consolidating here. Let's see. I don't even need to pull up. I guess I will. No, not the one I want. So I'll just do this. All right. So Oscar had consolidation down here and then expansion. Oscar's been having consolidation here and eventually it'll get expansion. Could it be expansion to the downside? Of course it could. Do I believe it'll be to the upside? Of course I do. Based on the fundamentals, based on the company, based on the leadership, based on where I see this company going. So at current levels, what do I think? I think you're getting a great deal anywhere under this halfway point. If it's under here, basically under 18, it's a great buying point. It's above 18, running into this resistance, then it's a good spot to take gains. I don't really do that because one of these times it's going to go. Or you could simply sell cover calls for up here. Cover calls basically against your shares. That way, if it comes back down, then you made this premium up here. So, yeah. At current levels, what do I think? And the same thing I've been thinking. It's a long-term hold for me. It's a long-term thesis, and I think still 2026 they're going to prove it in their numbers and earnings, and they're not losing people like crazy with ACA subsidies. So I think the Bears are wrong on this one. Oh, UMAC. I've just heard. I think I'm getting sick. Sorry for clearing my throat so much. I think I'm getting sick. You know when you kind of like feel yourself getting sick, like talking is a struggle and your throat's constantly like an issue. Yeah, we press though. We press. So Dave is a gem, another gem that we found and talked about, and we're in for a little while. But here's what I'll say about Dave. I think you wait. You had your base breakout there. You're having consolidation here. But while you're having this consolidation, what's happening? Tighter and tighter on the matrix, coming down on the histogram. And I think you get a push back down here to like 130-ish, and then you reaccelerate. So I'd wait on Dave. I do like it. $2.47 billion market cap. I do like it. I like the company. I like what they're doing over there. I like their little gopher looking dude. And I just think the chart doesn't scream it's a great opportunity right now. But I think it will be. Fundamentally wise, it's undervalued still, but it's not as undervalued as it was. 4 is another one I really like. But again, it's a falling knife. You can see it here. It's a falling knife back here. I do think eventually we form a base and then we do break out. And that's whenever I'll pounce. On 4, we've done the discovery. We understand that it's detached from its fair value. We've looked at the data. We understand it's undervalued. We understand where the company's going. We like it. And we just need that third piece. We just need that direction. We just need that direction on 4, and then we'll be able to take advantage. Yeah, UMAC is a drone parts manufacturer. I believe Trump's son is on the board. Correct me if I'm wrong. Lemonade, big up. 6% day. Yeah, big up for sure. On the monthly chart, again, this one is it broke out of its downtrend, or sorry, broke out of its consolidation. It's a base. Yeah, and also when you start getting sick, your brain just like stops working too, by the way. Yeah, big base here, breaking out of this. You got a long way to go to like 160, 190, get back to these 2021 highs. I remember these 2021 highs and I was like, what is this company? What are they doing? Seems like they're gonna take money and then like any extra money they get, they're gonna donate it or something like that. I was like, Wall Street's not gonna like that. I remember those days, and then you see what happened. Zeta projections for the next few days. I think Zeta goes down. I think all stocks go down. I just think overall markets go down, to be honest with you. Talked about this earlier. So consolidation, breakdown. Consolidation, breakdown. Probably. I think so. I think it's more likely that we break down than actually expand up. I do. Look at this. This is a Williams percentage range. You have this consolidation box form, and then a breakdown, and then just kind of chop sideways, and then down. Look at that. Look at this. Look at the result. Look at this. Down, down. Okay. Now look at this. Look where we are right now. This is not this. This is early 2025. This is right now. Williams consolidation box, breakdown, and then probably that, and then and then probably that, and then probably that. I say probably because I don't know. It could be different. It could not be the same setup. But like, look at that. Look at this. And look at this. Pretty much identical. Look at this. Look at this. Pretty much identical. Oh yeah, it's end of year into new year. End of year into new year. Look at that. Look at that. Even this, look, you ran up and then down. You ran up and then down. History often repeats. Look at the flow. Okay, the flow. We're here, right here, and then we'll have it next. Big drop off, big drop off. Look at the temperature. Since October, and this is when I really was doing alarm bells. I said, once we flip this, minimally, we're getting an 8% or more pullback. And that's what we got on the Qs. We got an 8% pullback from the highs. And then since then, nothing. Meaning we've climbed back, but this is still below the zero line. And it could just as easily spin back down. Like we saw here. And then back down. Because like, look at this. That was 8%. And then a little up, back to all-time highs, and then a dump. Look at this. 8.85%. A little hope, back up to all-time highs, and then what? The big dump day yesterday. Oh, yeah, we're rebounding today. Okay, cool. Doesn't mean jack. Oh. Look, I'm not being bearish. I'm literally just looking at the charts and just telling you exactly what I see. You can see it too. You can see it too. You might just not want to, you might not want to really see it, but you see it. Are you invested in any precious metals? AMPX, Amprius Technologies, I am. I really like this name as a trade and a investment. I think they're undervalued. Oklo being front run for me, I get it, but just think it's overvalued currently right now. No, it's definitely overvalued. I mean, you can't look at any fundamentals but Kaba. I remember you calling out Kaba. We crushed that name on a trade because you called it out. Look, again, I would just be careful with these high flyers right now and these small caps. Yeah, I don't like it right now. You see how like you have a run up and then you have a big washout and then you have a run up and then now you need a big washout because you already started it. Like you need a big washout. So I wouldn't touch it right now. Now you could reaccelerate, don't get me wrong, but the probabilities are not on your side, if you know what I'm saying. What are your expectations for Mobileye earnings? Do you think it will go lower due to the 900 million acquisition of Man-T Robotics? Yeah, I mean, they're definitely going to talk about that, and I assume that that's going to have some implications for the stock price. But At the same time, overall, I think they come in with good earnings. They raise guidance expectations a little bit, so for the bottom number. So, I think they come in and beat, but they are now running into earnings, so I don't know. If they run into earnings hot on the stock price, then that obviously could be a negative. I guess stop sitting up like that. That's how my back gets messed up. I'm like, opinion on UI path at the moment. I think they're undervalued. I like them. Now, is the chart great? No, it's not. The chart's messy. Path. So, this is the chart. It's messy, but yeah, it's messy. But you had a base breakout right here. That's what I do like. So you had a breakout, and now you're having like this retest area right here, and I expect it to continue higher, as long as we don't have a correction or a dump. Which again, I do think we're gonna have a correction or pullback. And then your flow or your matrix is kind of curling down. But we'll just see. We'll see. If it's able to break out and hold 1756, then you're going to see 2254 next. And then you can keep pushing higher after that, obviously. Do I think path is an opportunity right now? Yes. But the chart isn't the greatest on direction. But if you're dollar cost averaging and you have high conviction in the company and understand that it's undervalued as well, then there's nothing wrong with getting in now and just DCAing. If we run a DCF, we'll quickly see. Let's say they only grow 15%. Current margins are 20%. We'll do 25 there, and there you go. So at current revenues, with 15% revenue growth for the next 5 years, free cash flow margins of 20%, which is what they're doing right now, a terminal multiple of 25, which is what they have right now, and a 10% discount rate, you come to a total of $25.05. Current price $14.37. You are 74% undervalued on this company. 5-year target's $34. You're getting 19% annual CAGR. Really, really great. Really, really great. Really great. Beat it up some more. Say they only grow 10%. Say they only get a 20 free cash flow multiple. Well, you're still at 18% undervalued. Fair value is still $17. So yeah, it looks good. It looks good. Rule of 40. So they grow 15. Profit margins are 20. They're slightly under the rule of 40 at 35.1. Let's run a PEG ratio. PEG ratio. They're at 34 PE. Their EPS growth rate implied 75. They are flipping to profitability, so it is probably high. I like 26. 26. 131. So not quite under a 1. They're fair valued on a PEG. So yeah, you can compare all 4 models. Again, bump this up to 15. Bump this up to 25. And there you go. You got DCF at 25, EPS at 23, rule of 40, 5 points under, PEG ratio, little, it's fair valued, 68% average upside based on those assumptions. Pretty solid. Pretty solid for a company that's $14.34 today. So you're literally looking at, like 60 to 80% upside. Looks good. I like it. I like it. What do I use to look at charts? TradingView. TradingView, right here. TradingView.com. They got some pretty cheap products, honestly. So it's solid. Market's big up today. Big up today. Let's see. Bitcoin's back up above 90K. Ethereum still under 3K. QQQ. QQQ is bouncing nicely. I like to use haiku candles, by the way. Yeah, bouncing nicely, but again, still overall, guys, like the indicators I've created are pretty damn solid. I'm just not gonna lie. I can go back and show you the history. Every time we start looking like this, it doesn't look good. So even though we're up today, just be cautious. Today might be a day to take some more profits. I know I'll be doing that. And to overall just clean house on some things. The VIX spiked up big, and now it's spiking down big. What are yields doing? The 10 years down a little bit. Here's a point I want to make. Where's the 20-year? Where's the 20-year? US 20. Is that that? Is that the Japanese bond? $10. 20, 30. Bruh. There we go. All right, so the fudge is that, dude? 90s. What is this showing here? Why is it showing it like that? Oh, USO 20. There we go. I picked the wrong one. Get this out of here. All right, guys, quick little lesson. So this is the 20-year. Now, the 20-year, what you're going to notice is that, let's see. It's tariff cutting. Oh yeah, Japanese rates are down. But like look how crazy they've been. They are flying off the handle. But anyways, so think of it like this. This is the point I want to make. When yields climb higher, you have to understand that when yields climb higher, like 5% or doesn't even show way back in the day. There you go, 10-year. All right. Basically, what I'm trying to say in simplicity, when yields climb higher, you have to realize that people are getting 5%, right? So if the US 20 climbs to 5%, if it climbs to 5%, then essentially people sit there, especially older generations, sit there and say, I can get 5% on my money guaranteed. 5% on my money guaranteed in the stock market. Or sorry, in the US 20-year bond. Instead of playing around the sandbox in the stock market and potentially losing money. As yields in bonds continue to climb 6%, 15% like we've seen in the past, it makes zero sense to be invested in the stock market. If I can get over 8 to 10% annual return on my money with bonds because they're way higher and I'm getting that guaranteed return instead of the stock market where nothing's guaranteed, that's where people take their money from the stock market and put it in bonds. The more people take their money from the stock market and put it in bonds, what happens to stock prices? They go down. Okay. So that's the point I want to make. As yields go higher, it becomes guaranteed. It's guaranteed money. The higher it gets, the more 5, 6, 7% you're going to get on your money. Makes more and more sense for people to say, you know what, I'm going to take my money out and go put it over there. Have you covered OnDOS? I've only covered OnDOS as like a trade. I was in it as a trade. Made some good money. I didn't get in down here. I wish I would have known about it down here because you see we got a bull trigger. We were in the sweet spot curling up and out. We had a flush curling up and out, and this would have been a massive trade from 1 to 11. So my indicators really, really helped me in finding these. But sadly, I didn't find this one in May. It is what it is. There was so many other trades in May at the same time. So yeah. Right now, I talked about it earlier. Lots of resistance, volume shelf, lots of resistance. It's extended. Just be careful. I expect this to eventually come down here and retest here. If we have a big pullback or correction, it could come down here to like 5-7 range. I also think stocks will go down. What are you most looking forward to buying if it does? What I've already been buying. So I made a post. Let's see. Yeah, this post went viral. That's funny. So I made this post. How do I get? I'm just gonna remove my face. Oh, there we go. Crazy prices and deals I'm watching. Palantir at 125, Robinhood at 67, SoFi at 18, AMD at 170, and Netflix at 70, Nvidia at 140. I ran it in 25. Basically, you can go over this and look at this and see. This is like also my wish list of stocks and their prices. But also it's crazy prices. Like we would 100% need like a 20% plus correction, a crash, or a bear market to get to a lot of these prices. Not all of them, but a lot of them. And that's why I think drew a lot of people to really like this post. 1.6 thousand and 250,000 views was because it's crazy on a lot of prices, okay? Like Rocket Lab at 34. Rocket Lab's currently at 88. So people are sitting there like, 34, you're crazy. You would never get down there. Well, I mean, it could. If you look at the weekly here, you have basically your 50-day moving average all the way down here. Your 21's here at 62. It's ran a lot, and it's had these big pullbacks before. Now, it'd definitely be tough, okay? But all I'm doing is taking this previous support, or previous resistance breakout, and this could have been the retest of this, but if it wasn't, then it could come back down here again. Yeah, if we get 34, let's go. If we get Robinhood at 67 right here, let's go. And this is the thing. Look at this. People think, oh my gosh, there's no way this could happen, Ronnie. Bull crap. Did you forget in the bear market of 2022, Meta got down to $88. Look at this. $88.36. I'm probably a little off on that. $88.09. Guess who was buying here? And here, 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 and here. Me. I was buying all of this. Look at the matrix up here. Into the sweet spot, curling out, got the buy, boop, and we're gone. Flip the zero line and we're gone, right? After a downtrend. Boop. It could be that easy. Downtrend line. Okay, get your matrix. Okay, yep, it's telling us to buy. Yep, okay. We took back the 21 EMA. Okay, yep, we're good. And then we held the 21 EMA, held the 21 EMA, held the 21 EMA. Okay, we're broke it. Get out. Okay, back above. Okay, we're good. Okay, get out. And now you're here. So, and honestly, looks bearish. Meta looks bearish right now. But anyways, $88. $88 from Meta. And today they're at $613. Yo, Aria, what's up, my guy? Aria, I'm gonna have to get you on one of these live streams, man. I have to get you on one of these live streams. Yeah, so Robinhood at what? What'd I say? At 67. You guys think it's so crazy. It's not. Look at this. Symmetrical triangle pattern. Guess what? It's breaking down right now. The measured move of this symmetrical triangle pattern is $44. $44. Yeah, man. I'll let you know. I'm trying to get a good schedule going right now. And once I get a good schedule and like get that posted and then have more consistency with the live streams. It's hard right now because I got to go to the chiropractor 3 times a week in the morning to get my back aligned. But yeah, once I get that figured out, I'd love to have you on, man. Definitely want to have some other people on for sure. Hope you're doing good. Should be making money today, besides our Adobe. Yeah, Hood at 20x, price of sales 2 as a brokerage, minus 60% lines up. Yeah, man. People think it's crazy. I was talking about this viral post I had yesterday. And these prices, man. And if we go through the comments, this one was hilarious. Nighthawk was oh man, dude, I saw this, and that's why other 17 people liked it. I was dying. When I saw this GIF because this is just straight up like, bro, you serious right now? You gonna do that to me right now? Are you serious right now? I was dying at that, dude. But yeah, like these prices, people get really, really upset when you say their stock, could go down to a certain level. and they're so caught up in euphoria, they're so caught up in, crazy land right now that they just don't believe it. But people, I'm realizing a lot of people are newer investors, newer traders to this market, and weren't around during the 2022 bear market, weren't around during the 2020 COVID crash. And it's okay. I'm not attacking you. I'm not saying like, oh man, you don't get it, man. You're not an OG like me. I'm not saying that. I want to teach. I want to help you understand. I want to help you realize that the markets don't only just go up. And that type of mentality, that type of gambling mentality, where you're just like, I'm just buying on DOS here because everybody on X is talking about it. That might work for a little while, but it's not going to work forever. And eventually it's not going to work so much that you're going to get destroyed because you're going to say, man, I'm just making so much money. Like, this is easy. Just follow these smart guys on X. Markets go up. I buy on DOS. I make 100%. Okay. What's the next play this guy's got? And then I go all in on the next play this guy's got. And then what happens? It doesn't work out. It tanks. It goes down 80%. And then you're sitting there, you don't have the conviction or anything. So you sell at a loss. And then it could still go to where you thought it was going to go. But first it went down here and then up there. And you sold down here and then you didn't get the gains up there. It's very dangerous games right now. It's very dangerous for a lot of newer people right now. And anytime I come out and I say like the charts look bearish or posts like that, I get so much hate in the comments and whatever, right? And that's fine. I don't do this for the people that shit on me and everything on X. I do this for the people, for the quiet person that never likes one of my never likes one of my posts, never comments underneath my posts, but will privately DM me on a random day. And I get it. And it's just like, hey, Ronnie, I've been following you for like a year now. I've learned so much from you. I really appreciate all your content. I really appreciate you've taught me so much. That is why I do this. That is why I love this. Because if it wasn't for stuff like that, or people like that, or people like you guys that are here with me and trying to learn, why would I be here? Why would I do this? Honestly, the haters are going to be like, oh, well, you have a community, you have a paid subscription, blah blah blah. Okay, time is worth money. I don't know if that's new to you, but it's worth money. Time is worth money. If I'm going to give you my time, and especially extra time away from my kids and my wife and my family, then yeah, it's worth money. Elon Musk has like 50 businesses. I exaggerate, but he has like 50 businesses and he's like the richest person in the world. Yet he's still going there and making money. Well, why doesn't he do it for free? Because it's his time. He's building stuff. He's working on stuff. Like, people's arguments are just dumb. They're just dumb. Just cult behavior, to be honest. It's eerily similar to sports teams. People are defending stocks like sports teams and don't care about fundamentals or being objective. 1000%. 1000%. Couldn't agree with you more, Aria. That is so true. And you know what I've learned? I'm 32 years old now. I'm a diehard Steelers fan, but I used to be way more diehard. I used to like hate other teams. I hate the Patriots. I hate Tom Brady. Oh my gosh, I can't stand them. And then as you get older, you're just like, okay, I still love my team. I'm still like I still want them to win and everything. But like, you just get more mature and you just realize like, dude, it's just a game. It's just sports. There's no reason for you to be cussing out other people. There's no reason for you to be hating other people because they're on the opposite team or something. Same thing with stocks. There's no reason for you to get upset or mad because somebody has a different opinion about your stock. Like, I'm sure there's somebody in Robinhood. I said, oh, Robinhood could go down to 67. And they're just like, no way, dude. Robinhood's an amazing company and they're groundbreaking and they're a moat. And I don't disagree with anything you say, but that doesn't mean that the price is going to go here. I would argue with a company like Zeta, a lot of people know that the fair value is $30. If you look at analysts, the lowest rating, the lowest price target on Zeta is like $27. We're not at $27. We're at $20.54. Price doesn't always equal fundamentals. Price doesn't always equal what it should be. In the short term, stocks are a voting machine. Right now, you're seeing Ondas being voted up to the popular club. You're seeing, well, you were seeing Robinhood, but now you're not. You were seeing SoFi, but now you're not. You were seeing Nvidia, but now you're not. You were seeing Palantir, but now you're not. Now you're seeing small cap, speculative plays, all these other companies. You're seeing these themes: space, Cool Kids Club; materials, Cool Kids Club; drones, Cool Kids Club. Who else? Defense, Cool Kids Club. What's not cool right now? SaaS, subscription as a service. Oh, those kids are nerds. Those kids sit at the lunch table. Those kids go to the bathroom to eat their lunch. People don't like it. People don't like them right now. But it's where people hate to look or hate to be associated with where the best deals are, not where people are the loudest. Typically, I get pretty loud about Zeta, and I'm damn sure I'm right. But hey, you know, again, like, but at least with my Zeta call, like, it's like I have the fundamentals to back it up. No one's looking at the fundamentals and saying, well, Ronnie, that's just not right. They're actually not undervalued. I haven't heard one person make that claim to me that Zeta isn't undervalued, because they can't. Any way you look at Zeta, it's undervalued. People say other things like, oh, the lawsuit, stock-based compensation, the CEO's history, blah, 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 blah. Like, whatever. We've already talked about a lot of those things. All right, I'll get off my soapbox. Sorry. But yeah, guys, these prices, and I was going to make a post about this today. I might make it live here. Here you go. I'll do this. I already had the post drawn up. Where are we at? Here it is. Some of these definitely felt crazy until I read the comments. There you go. I'll post that. Because yes, as I was writing some of these, I was like, yeah, this is pretty crazy that it could get there. But then I read the comments, and it's constantly like, you're a R word, the R word. I don't like to say the R word. You're you're high. How much have you drank today? Which I'm sober. I've been sober for over a year, so I don't drink anyways. Basically just everybody in the comments is just like, you're crazy. There's no way. And like mad at me because I posted this. And that right there is exactly why these probably will go to these prices. Maybe not tomorrow, maybe not next week. Eventually, though, yeah, they could definitely go to these prices, guys. Because when everybody's sitting there saying, there's no way these could go to these prices, there was no way that Meta could go to 88. But then things shifted. People got bearish. And in today's market, people are like fish, and they just keep swimming towards the new shiny thing. Oh, shiny thing over there. Shiny thing over there. Oh, Robinhood, SoFi, Ondas, Zeta, Pagaya. Swim, 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 swim. And the distance to swim from here, this stock, to that stock, you're usually late. And then the crowd's already over here. And then you go there. And then the crowd's over here. And then you go there. And the crowd's over there. And you go there. And so on and so forth. Stop, breathe, research companies, pick a few, find the ones you have the most conviction in, buy. Stop worrying about hitting the next 10x. Stop having FOMO, fear of missing out. Just stop. X is just like a freaking X and social media is honestly like a fire hose in your mouth. And it'll just drown you. It'll drown you if you let it. But if you just take a little bit, if you just follow the right people, if you just don't get caught up in hype, you're going to be okay. And if you just like learn Learn how to do these things. There's no one that's just going to give you the handbook and like give you the not even the handbook, give you like a TikTok of this stock and then it's perfectly going to work out, and then a TikTok of this stock and it's perfectly going to work out, and then an X post of this stock and it's perfectly going to work out. That's not real. That's not real. And it's not real for one reason. When you don't have the conviction in that stock, when it inevitably goes down, you will sell. Why? Because you don't have conviction. You're stealing somebody else's conviction. If you steal my conviction in Zeta and Zeta goes down to $15 tomorrow, you're probably going to sell. If you take what I'm saying with Zeta, go do your own research, understand it yourself, and understand and obtain your own conviction, you'll be begging for it to go to $15 tomorrow and saying, I'm going to buy a bunch of leaps. I'm going to buy a bunch of stock in Zeta. That's the difference. That's the difference. Appreciate you, brother. Thank you, David. It's really cool to have a public portfolio on Blossom. Yes, appreciate it. Yeah, if you guys want to follow my public portfolio on Blossom, it's the link in the description below. If you're watching this on X or anywhere else, you go to the link in my bio, and it's like my landing page, and you can find the Blossom app on there too. You can download it. It's completely free. It's completely free. You can link it to your brokerages. You have this nice UI. It can compare to the benchmarks of the stock market. It's a really cool app. It's completely free. You can track your own portfolio, link it to your brokerage, manually enter your stocks, and then you can also follow people like me and other creators that you like and see what they're buying and selling all the time for free. And I have a public portfolio there, and I show all my moves. Appreciate you taking the time, sharing your knowledge with us. Of course, man. This is I don't get me wrong. I love the stock market. I love talking about stocks. This is my passion. But it's just like those crappy people, man, and like, reading some of those comments. And it sucks because like people are like, well, then just don't read the comments. Well, if I don't read the comments and reply, then I'm missing out on talking to really awesome people. So it's like, to talk to the awesome people and comment and help people, you also have to read the shitty posts and people shitting on you and the super negative people in life. But whatever. I just got a thicker skin. That's all. Are you interested in Netflix at these levels? I don't think I am yet. I do like Netflix long term. And look at that. $70 is right there. Why $70, Ronnie? Well, guys, charting can be this simple. I promise you, charting can be this simple. Take a line, horizontal, go. Okay, here was resistance. Here's the highest point that Netflix got in 2021 before the bear market. Okay, do a little magnet if you want to. Boop. Okay, so what do we have? We have resistance 1, resistance 2, breakout of resistance. And then we went up and away from 70 up to 133. Now this is obviously split adjusted. And then now we're coming all the way back down, probably to 70. But before we get to 70, you need to break through this support. Support 1, support 2, and now here, will it hold? If 83 holds, then we'll go back higher. If it doesn't, then we're going to 70. And then I probably think 70 will hold. And then if you want to do a volume shelf, do it from right there. And you're in the volume gap right now, down to here, 60, 70. So yeah. Am I interested in Netflix right now? No, it's a falling knife. There's no direction to it. It hasn't started to stabilize and create support. Am I interested in Netflix overall as a company? You're dang right. You're dang right I am. let's talk about mamas. Just kidding. Let's talk about margins. Margins up and to the right. Revenues up and to the right. Net income up and to the right. Gross and operating profits up and to the right. EBITDA up and to the right. Cash flows up and to the right. CapEx and dividends up and to the right. Balance sheet, good. Cash to debt, it's always going to be a lot of debt simply because they are making movies, they are making TV shows. There's a lot of money in that. And you constantly have to be giving out that money and having debt to run those TV shows and movies and all those projects. And if they get Warner Brothers Studios, I get even more bullish on Netflix. Superman, Batman, DC overall, Harry Potter, all of Harry Potter, Game of Thrones, 3 massive brands. You are not watching this live stream right now and not know DC, Superman, Batman, not know Game of Thrones, and not know Harry Potter. 3 of the biggest names in movies and TV shows in the last few centuries. Are they paying a lot for Warner Brothers? Yes. But will those brands, will those like there's endless content there with DC adding Game of Thrones and Harry Potter? Guys, there's so much content to be made. The fan base of those brands is huge. Is huge. Shut up, Nick. Shut up. You're so stupid. Nick says, "How's it going, Tanner?" God, man. I have a doppelganger out there in Tanner, I guess. I guess we look the same. I guess I'm just chunkier. All right. But yeah, so Netflix. Undervalued. Hold on. We don't know if it's undervalued yet. Let's check it out. Netflix. Revenue growth rate, they're at 15% right now. I think they stay right around 10%. Free cash flow, I think they can get up to like 20, not 223, 23. And I think they do deserve this 41 terminal fair value. We'll give it a 35 because they're a moat. Okay. Right now, they're 8% undervalued. But if they drop to 70, right? Well, they're not even 87 right now. They're actually we have a small lag on this. They're 83, right? It'll have this at the end of the day. It doesn't do intraday. So yeah, at 83, they're probably about 12% undervalued. And if they get down to 70, then you're looking at 20 to 30% undervalued based on these assumptions. So yeah. Are they undervalued? Yes. I'd bite Netflix at $75 a share. That's a 23 forward PE. Yeah. I would be it'd be hard for me not to be really pushing the buy button down here under 75 as well, Nick. So yeah, I really like it there. Really, really like it there. All right, guys, what time is it? 11:22. So again, watch out for the Qs, the SPY, and the IWM. If they start falling from lunch into end of day, then we are definitely going a lot lower. Like 5% minimum pullback up to a correction, right? If it just fades away, which crypto is already starting to fade away. Bitcoin was above 90K, now it's below 90K. Ethereum got the 3K, now it's back below 3K. Be careful. Watch out for this. Watch out for this. Don't be afraid to take some gains. Don't be afraid to take some gains. I showed you guys this already multiple times. Let me show you this again. I wanted to show Nick this too. So, well, I sent you the picture, Nick, but look how freaking similar this is, man. Consolidation after a huge run up, break of the Williams consolidation box, consolidation, breakdown, consolidation, breakdown after the Williams box, consolidation, breakdown, consolidation, breakdown. Matrix is flowing lower, matrix is flowing lower, just starting to ramp down on the flush, just starting to ramp down on the flush, below the zero line, below the zero line. I would take some profits today. I mean, that's just me though. Again, it's all the laws of probability. The laws of probability. Do you believe from everything I'm showing you? And again, the last 2 times we've consolidated like this, we've had big drawdowns, big drawdown. And now consolidating again, have gone nowhere since October. Literally in the QQQ and the SPY, we've gone nowhere since October. The IWM small caps are the only thing that is up. Gone nowhere since October. Consolidation brings breakdown or expansion. Again, the last 2 times we had this type of consolidation at the tops of these big moves, we've gotten breakdowns, not breakups. Trump is starting to increase his rhetoric, starting to go all crazy again. The same way that he went crazy in the beginning of 2025 when we had Tariff-geddon. My opinion, it feels forced. It feels like, okay, market's hot. I want a good reset. I mean, oh man, I hate to be like that. I hate to be like that. Take care, David. Have a great one, man. I hate to be like that. But you have midterms at the end of this year. Does Trump want the market to keep running hot right now and then have a pullback or correction second half of the year going into midterms? And again, this is just being conspiracy, opinion based, whatever. Or would he rather have the market's correct now, the market's pull back now, and then you run from April into the end of the year with midterms in the stock market's very good, very juicy, and you have big money, fat and happy? Ask yourself that. Because again, probabilities are everything. Nobody knows 100% if we're going to go up or down, even though it's a 50% chance. We definitely need to pull back before the midterms. Yeah, it makes sense. So again, you correct down here to like the 50 SMA to 542 on the Qs, a solid 15% pullback, and then you run hot into year end. Or what I think is less likely, you take this consolidation and instead of like the last 2 times, you break out higher and move to like what, 700, 800 on the Qs, and then you pull back in the midterms and everything. I don't know. That just seems kind of crazy. That seems kind of crazy to me. Also, you've had, I didn't even show you the RSI, bearish divergence, consolidation, more divergence, down, oversold. Again, like everything I'm seeing with my indicators, with basic indicators like Williams percentage range, RSI. Again, just ask yourself, what is more likely based on everything you're seeing? Is it more likely that you break up and out or break down? I think it's more likely you break down based on everything I'm seeing. Again, it could break up. If it breaks up, okay. It would literally go against everything you're seeing here, though. So historically, we pull back the 3 months leading into midterms and rally hard after early November. Yep. This is looking like a classic dinosaur setup. Lol. Yeah, I mean, historically, yeah, but again, at the same time, um, I'm sure Trump wants, you know, to stroke his ego and have big, fat bullish market going into midterms instead of a down market. But again, guys, nobody knows. I don't know. I'm just looking at probabilities. I'm looking at indicators that are like indicators are all lagging for the most part. There's not really any leading indicators out there. So we'll see. But just because they're lagging doesn't mean they're wrong, right? So indicators show us the trajectory and the momentum of where stocks are going, where indexes are going. And to break momentum, you need big, hard collisions to knock off momentum from its direction. So if you're in an upward momentum, you need a big, hard collision to knock that off its path, right? If you're in a big down market, like we saw, you need a big, hard collision to knock it off its rocker and move it to the other direction, i.e., tariffs, negative uncertainty, recession, blah, blah, blah. Okay, here comes Trump. Actually, we're gonna come back and I'm gonna taco. And he tacos and big collision, and then people get over the tariff getting crap, and then no, we're good. So go back to 2018. All right, let's do it. Since October, what news or figures need to be released before we finally break out? Earnings figures are becoming important too. Yeah, remember that the government was shut down. Federal employees weren't getting paid for a little while there during Q3. So, just understand that that could have affected earnings for a lot of companies. So, yeah, it could earnings could be not so great. I know everybody thinks earnings are going to be great, but they could be not so great because you had like 2 months of federal employees not getting paid and people cutting back on spending. We'll see though. All right, 2018. Yeah, consolidation again towards the top and then breakdown. Look at that. Break Williams consolidation box down. Matrix up once it crossed, yep, down. Flush out on the flow. Same looks the exact same as right now. Bearish divergence, flush down. So now you have 2018, 2022, 2021, and then tariff getting. So yeah, it's like every time you get to these tops, you get this consolidation, and then it's really hard for it to continue going. Let's see. Look at January, February. January. Oh, you said 2018, sorry. Okay, yeah, so you have this consolidation. This was with Trump. But what I will say about this is 12%, 12%. You had two 12% pullbacks. What's up, Muhammad? Nice to see you. Thanks for joining us. So the only thing about this is that you had two big pullbacks. So far, you had November, which was like 8% pullback, and then you went back to all-time highs. So right now, again, this could, if this is like 2018 again, then okay. You had up 8% pullback. This was 12%, and then you go to all-time highs, and then you have another 8% pullback. That could happen. And then you could break out into all-time highs and push higher for the rest of the year for sure. Screenshot this and present date. Do a comparison one above the other for X. Yeah, that'd be good. Let's do that. But let me see the other indicator. Bearish divergence. Yeah, Williams consolidation box breakdown up here and then breakdown again. Yeah, look at this again too. So you have the matrix flip bearish. We're right about here right now, and then boom, flush out. Yeah, because 2018 was Trump too. So yeah, I get what you're saying there. Give me that. 12%, 12%. Yeah, 12%. That's big. So if it's not 12%, maybe it's 8%, 8%. But either way, you're looking at 2 pullbacks. Podcast talk here tomorrow. Yep. Yeah, tomorrow's Thursday. Damn, let's go. Yeah, guys. Me and Nick Wealthmatica, we're starting a podcast. Invest Simple podcast. So we're going to be having hosts on. We're going to be talking stocks. We're going to be talking due diligence. We're going to be going deep and trying to find fundamental undervalued companies. We're going to be having guests on talking about their point of view with stocks, with investing or trading. We're going to be trying to teach how to invest, how to chart, how to do these things, mentality around investing, mentality around trading, right? It's going to be really good. It's going to be really, really good. So we'll be doing it live on YouTube, and then we'll be streaming it everywhere else as a podcast on YouTube, Spotify, Apple, so on and so forth. So yeah, get ready for that. And yeah, it's gonna be great. It's gonna be great. Well, if you want to do that, here. Are we gonna spin up? I think we still got to spin up that YouTube channel, which I can do that real quick today if I have time. Yes. Okay. Let's see. All right, so that's present. Or sorry, that's 2018. Sorry. 2018 and present. So let's just say this is the same. So you'd be looking at like 573. So whether you want to say it's the same as 2018, well, there's more downside. If you want to say there's another pullback or correction based on everything I'm showing you, well, then there's more downside. So yeah. Yeah. Trying to get this put together for this post. What questions you guys got? What else you want me to look at? If anything. Oh my gosh, trying to get these pictures on here. It's annoying. MDA. It's our YouTube mirror to our personal accounts for amplification. Yeah. Yeah, let's do that. I've been following on X and watched some videos time to time. Really good job. Keep it going. Thanks, man. Can you analyze Oddity, not chart, but fundamental? Yeah, we can do that. Let me just check out MDA real quick. I think MDA was looking good, honestly. Yeah, look at that. Wow. So flush out on the flow. Sweet spot down here on the matrix. Breakout. Breakout. Expansion. Flush out on the flow. Sweet spot. Matrix bull. Matrix bullish cross. Break out of a downtrend. Expansion. So MDA probably goes to 48. Probably sees these highs here. I would expect a pullback soon because it's extended. I know that's what you really probably want. Maybe back down to like 33, 34 or down to like 30. Yeah, 30 to 34 range. Iran stock down 10% from today's high. Wow. Oh, shit. Thanks, Purdy. Appreciate that, man. Yeah, down almost 5%. Okay, okay. All right, okay. Don't panic. Everybody relax. What's the procedure? What's the procedure? Where's my office fans out there? Where's my office fans? What have I been talking about on this stream today? What have I been talking about? Let me talk to you. I've been saying, okay, we got to bounce. Cool. We were down over 2% yesterday. That's great. What did I say to watch out for today? I said, oh, we're approaching lunchtime. When we hit lunchtime, from lunchtime to the end of the day, what do we need to be looking out for? We need to be looking out for weakness. If this market just completely U-turns from the highs after lunch into end of day and goes weak throughout the rest of the day into end of day, Houston, we have a problem. Houston, we have a very big problem. And all those things I've been talking about, they're way more likely. What are we seeing right now? Well, we are seeing what? We're seeing what? Up S&P 500 was over 1%, now down below three quarters of a percent. NASDAQ was up over 1%, like 1.3%, up down to a quarter percent. The Dow to a quarter percent. Small caps, IWM was freaking flying almost 1.5%. cut in half, down to 0.80%. Bitcoin hit over 90K, back down below 88K. Ethereum hit over 3K, back down below 2.9K. Weak. I told you guys to take profits. The time to take profits was on that dead cat bounce. I don't know what happens from here. This could just be a small little pullback intraday, whatever. If this continues into the close, buckle up, ladies and gentlemen. That 8% pullback is probably coming or worse. But the great thing about it, Zeta, Oscar, Mobileye, Robinhood, SoFi, all these amazing companies for the long term. I'm going to be scooping them up like a fat kid in a candy store. I'm going to be grabbing shares like crazy. Why? Because I have cash. I'm going to be buying leaps like crazy. Why? Because I have cash. If you don't have cash, you've been chasing these hot flying stocks, and you don't have any cash and you're fully invested near all-time highs, and we're about to pull back 8%, you're about to be very hurt. You still have time. 0.5% now up on the Qs and SPYs. This market is absolutely dumping. It's dumping. Bitcoin to 88K, crazy. Yeah. I think Bitcoin could go down to 60, 70K if this pullback correction happens. Do you have any 2026 predictions? I'm accumulating cash, looking to buy bottom at some point during the year. Don't focus on trying to buy the bottom. Just focus on trying to buy great companies at great prices. That's my advice to you. Try to buy great companies at great prices. And wait, just like, are my indicators great? Yes, they are. But could you also just like do like RSI or something and say, okay, when RSI gets oversold on the weekly, that's when I'm going to start really buying into companies? Yeah, sure. You can do that. My indicators do make it easy. That's why I built them. I built them for me to make it simple and easy, because I want them to sit there and tell me, okay, we flushed out. Okay, we're down here in the sweet spot. Right here in April was time for me to say, yeah, I'm going to start deploying heavily my cash right down in here. And it worked out heavily, worked out beautifully. Once we took back the 21 EMA, I sat there and said, okay, we're curling up and out. I'm going big on trading. Went big on trading, made stupid money. Made about 150K last year in trading around like a 200, 300K portfolio. So not even like trading $1 million, trading like a 200, 300K portfolio and made 150K. So yeah, we do trading, we do investing, we do it all inside the investing community and also the trading community. If you want long-term investing mindset, you can join that. Link is in my bio. If you want trading, if you want active trades to get in and out of and not marry stocks, we do that as well. Link's also in bio. My prediction, I don't predict markets. I react to markets, basically. So right now, I'm reacting and saying things don't look good right now. Things are falling back in line. You broke down here. I think you come down to like 567, 12.46. But I do believe that I'm going to have my best year of trading this year. I believe I'm going to have my best year of trading this year in 2026 after the pullback and or correction, after we get a reset down here in the sweet spot, after we get a flush out. When that happens, I'm going to be going big into stocks and trading and investing. And I think I'm going to have one of my best years yet in trading, because I've been working on my strategies. I've been consolidating my strategies. I've been doing all of these things to get better and better and better. You always need to be getting better in investing. You always need to be getting better in trading. Even if I do have 10 years of experience, you always get better. You always try to improve on your skills. And that's what I've done this year. That's what I've done in 2025. I've completely consolidated 1,000,001 indicators, 1,000,001 different things I was doing, 1,000,001 different strategies, all into the matrix and the flow. And now I can simply sit there and say, okay, we're extended into markets. Right now is not the time I should be going heavy into markets. I want to be going heavy into markets down here in the sweet spot and after a flush out. Like here, like here, like here, like here, like here. Make a lot of money, make a lot of money, make a lot of money, make a lot of money. When you're extended and you're like getting back in, I don't know, like, okay, say you missed this and then you have this little pullback. Okay, you get back in here. Okay, well, this you're just swing trading on the daily chart. Okay, you make some good money by looking at themes. And then you have another pullback. Okay, and then you get in here. Okay, you make a little bit of money because again, you're up here and you're overextended. So you're not like deploying all your cash up here. You're more so, my chart's not showing. Dang it. Sorry, guys. Let's see. Oh man, I just got rid of the screen. There we go. Okay, so as I was saying, by you guys looking at my face, now you can see it. When we're up here, extended, up here, extended. Now, if we curl back up and go up here, this is where I'm just going to be doing small daily swing trades, just daily swing trades. Why? Because we're extended up here and the flow is pointed down. Doesn't look that great. Doesn't look that great. When is the best time and why I think 2026 is going to be the best? Because I do think we get this washout here. We get down to the sweet spot here. And then that is whenever I'm going heavy in investing right here and here, heavy in investing, heavy into trading, just like in April, right? So we had this flush out on the flow. We had to move down to the sweet spot in the matrix. And then basically you sit here and you say, okay, I'm buying heavy on investments. And then you break out and you hold above the 21 EMA. Okay, now I'm going big, 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 big in trading. And you make from 488 to 636. Do you understand the type of moves that you're getting in trades when you're going 46 to 635 in the QQQ? If the QQQ is moving that much, you are going bonkers in trades. You're making stupid money. I made stupid money in SoFi and Teradyne and Iren and NBIS and Bloom Energy and NVTS. Like these trades just freaking crushing, dude, crushing it. Why? Now the common saying is, you know, people say it's an insult. Oh, you only make money in a bull market. Okay. You should be aiming to only be trading big in a bull market, right? If a bull market is easy to make money, you should be aiming to catch the bull markets. Now, where everybody gets messed up and where everybody loses money is this. I'll show you. Watch this. Ready? Walk with me. Imagine you were in my Discord and you were just following my strategies. And you got the matrix and you got the flow from me, the indicators I built. Let's say this. Let's say you really took in what I was saying and you're going to follow it to the T. And you understand, I don't need to trade all the time. I don't need to trade every single day for 365 days. I don't need to be in every single trade. I don't need to chase every single new move. Let's say you understand this and you only are going to trade the bullish cycles. Well, how do we know what the bullish cycles are? I'll show you. Okay. They come after a washout on the flow and a washout on the matrix, and you get into the sweet spot, you curl up, and then you reclaim the 21 EMA. Okay. You could sit there and be like, oh, well, I didn't get this certain bottom, or I didn't get here. I got here. Okay. You still went here from here and made massive money trading. That's all that matters. That's all that matters. So walk with me. 2024 was a crazy year. If you bought the dips, you made money, right? So you traded here to here, you made a ton of money. Matrix told you, hey, we're extended, choppy, and then we pull back. And then we reaccelerate. We reaccelerate. You say, okay, now I'm going to get in some swings based on great themes. Okay. Then choppy and then drawdown. Okay. Then we reaccelerate again. Okay. I'm making money on daily swings. I trade the weekly charts and longer term trades when we're coming out of these big washouts like here and here. When we're reaccelerating, because we're already up here, we're not coming out of the sweet spot like here or here. When we're reaccelerating up here, what am I trading? I'm simply trading daily setups, daily A+ setups in strong themes. So recently, strong theme in this daily setup would have been drones, defense, space, etc. So, okay, you made money. Where do people lose money though? They're impatient and they sit there and say, I have to trade all the time. I have to trade all the time. I have to catch the next big move. Okay, look at this. Look at this. Ready? Consolidation, up and down and up and down and up and down, and then crash. Look at this. Consolidation. Once you got about here, it turned down. So in December of 2024, it told you, hey, you shouldn't be in trades right now. You shouldn't be trying to trade this right now. It's not good. And then you stayed down and then you crashed. You consolidated, then you crashed. This is where people lose money. They could have made all the money in the world here. But guess what? They lost it all or lost more than what they gained here. Why? Because they're trying to force everything. Now, let's play how greedy are you? Let's see. You went from April and ran up a monstrous 31% on the Qs. You went from April till November, October, November timeframe, and you made a crap ton of money. And then the Matrix told you, hey, guess what? Bear trigger. Guess what? The flow is coming down. You've already had your move up. You already had your big spike up. Now you're just coming down and down and down. Volume momentum is getting less and less and less. Less and less and less. It's time to trim. And then you flip the zero line. And then it's like, okay. And then you start again up here coming down closer to the zero line. You start getting really tight on your matrix lines. And then you flip. So right in here, it told you, hey, stop. You made all these gains. Stop. It's October, November, December. It's Christmas time. It's Thanksgiving. Time to be thankful for all the gains you made during this year. But people are too greedy. So what happens? You get chopped to death, and you lose. Yes, algorithms kick in. They send this sector higher, that sector higher, this sector lower, that sector lower. You just get chopped up. And then you send me messages like, Ronnie, I need help. I was up so much money this year and now I'm break even. Now I'm losing. What am I doing? If you simply follow this, if you simply follow these cycles, this is easy bull market. Trade with the grain, not against the grain. Trade with the grain, not against the grain. You just follow this and I'll show you. Look at this. Look at this. Look at this. Look at these circles. This flush out, Matrix got in the sweet spot. Play in the sandbox when you're coming out of that. Win. And then play the small pullbacks in reaccelerations here, here, and yeah, there and there. So let's see, there and there, right? Play those small accelerations again. Here, after the drawdown, big flush out, sweet spot, right? And you had this one fake out. Okay, one fake out happens. At the same time, you didn't hold the 21 EMA. So, and you didn't break out of the downtrend, right? So that's just how that works, right? And again, this isn't like 100% thing. Like this stuff will happen. There's a bear market. It's tough. But let's just say you played that, you lost, okay? And then you said, okay, we'll just wait. And then you played this one and then you won big, right? Big win, big win. And then you play this one, big flush out to the 0, big flush out, sweet spot. You play it here, you make a lot of money. And then here, big flush out, reacceleration. You're only playing with daily swings. You're good. Here, big flush out, sweet spot, get in, make a lot of money. But where you're losing is when you're trying to force trades here in consolidation, here in consolidation, here in consolidation, here in consolidation. This is where you're losing money. And algorithms are just kicking your ass, basically. So, yeah. If you truly want to like just trade the ups, which you should only be trying to do instead of trying to like stroke your ego and try to trade everything. Yeah, this is my methodology. This is how I do it. This is how I do it. When we're not coming out of the sweet spot, when we're not coming out of here, then we're in windy weather. Like windy weather means like we're already up here and we're extended. Sure, I'll trade these reaccelerations here and this reacceleration here. I'll make money. I'll do it on daily charts. I'll be on swing trades for like a couple days to like 2 weeks, and I'll make money. And I'll make sure I'm in the right themes. But the real money in investing and in trading come after a flush out or a washout, and the sweet spot is on the weekly and you're coming out of that. This is where you get massive opportunities in the market. But Ronnie, I don't want to miss out on opportunity. Brother. This is 2020. The year is 2026. How many opportunities did you get? Let's count them. 1, 2, 3, 4. Out of the last 6 years, which 2026 isn't over, so let's say out of the last 5 years, you got 4, count them, 4 opportunities to take advantage of companies at lower prices, at crazy bargain prices. You had a crash in COVID, you had a bear market, you had a correction, and then you had a crash. Guess what? You'll have another crash or correction. You'll have another bear market eventually. Stop acting like time isn't on your side. It is. Stop deploying all your capital up here when everybody's saying, we're going to the moon, we're going to this price. Like, I get that I'm saying Zeta is going to be a $30+ stock. Yeah, I don't know exactly when the market's going to pull back, when it's going to crash. I'm not saying it's going to happen tomorrow. I'm just saying, like, fundamentals say Zeta is a $30+ stock. Fundamentals say Oscar's a $30+ stock. Fundamentals say Mobileye is a $20+ stock. When? I don't know. Even if the fundamentals are there, guys, the direction has to be there. And people have to want to buy the stock. And oh my God, After giving these analogies, after giving this lesson, guys, look at the markets. Who told you to take gains? Come on. S&P 500 from over 1%, less than 0.5%. NASDAQ from over 1% down to 0.4%. Dow from over 1% down to 0.5%. IWM, small caps, from literally 1.5%, round tripped all the way down to 0.33%. But everything's fine. Everything's fine. Just go to X, scroll through, see all the people saying, oh, Ondas is going to 50 tomorrow. Market's bottomed. Buy, 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 buy. Too many pumpers, not enough realists. I'm making that a post right now. I'm making that. I like what I said there. I done like what I said there. Too many pumpers, not enough realists. Boom. You like that? That rolled off the tongue real nice, like, you know what I'm saying? That was good. I like that. There we go. Check your phone, bro. Let's go. You just posted that? That's awesome. I need to check the mail. Hold up, guys. We might be doing an unboxing from Zeta Live. Hold on. Give me a second. I got to check the mail. Our mailbox. We have like one of those community mailboxes or whatever. So, dude, that's awesome. The pink Zeta hat, dude. I love that, man. I'm pumped to wear that. Oh, dude. Because I've been saying that. I was like, oh, you gotta give him the pink Zeta hat for Dan Ives. What am I doing with Zeta at today's prices? Nothing. I'm just holding, friend. Just holding. But yeah, guys, Bitcoin under 88K, Ethereum almost under 29K. 2,300 people are live with us, and I appreciate all of you guys. I really do. It's awesome to have people want to listen to you. I don't take that lightly. I never want to pump stocks. I never want to mislead people. I'm a true and genuine person, and I really hope, whatever I say, whatever lessons I give, whatever, the things I talk about, the questions that you guys ask me, I really hope that it helps. I do. F the haters, and I hope that I hope that what I'm doing here is helping you guys, honestly. Ronnie, should I sell? I'm doing good, but it's only luck. My plays that I'm confident with, I learned from you. I think you answered your own question there, friend. And guys, remember, I can never tell you what you should do. Even people in my community, right? I'm not a financial advisor. There's rules and stipulations around things that you can say to people and tell them to do in financial advice. Nor should you want me to give you financial advice. I want to give you the fishing rod and teach you how to fish and be patient and wait. I don't want to give you the fish in your mouth. Because like what you were just saying, Zenon, what you were just saying, you've been taking fish freely, and that's great, and you made some money, It's great, but you're sitting there saying it's only luck, meaning you know that you don't have the conviction and you're borrowing conviction from other people. And again, that works for a little bit of time, but it's only going to work for so long, you know? So, yeah. Yeah. It's have conviction. Have long-term conviction. If you want to trade, you can trade. That's great. But if you're going to hold long term, you better have conviction. With Tesla, I held Tesla and bought into Tesla, and I had to go through so much crap. I had to go through crap, guys. So much. Okay. When I bought into Tesla, everybody was sitting there saying EVs are dumb. This is only a car company. They don't make money, blah, blah, blah. And they were partially right, but I had conviction in the company and where they were going. And I was right. And I made a stupid amount of money on it. And it was great. And then I sold because it got way overvalued. And the promises weren't coming in as and they weren't getting delivered. But I had to go through so much crap, so many headlines, so many bearish takes on Tesla. Guys, if you can't handle that, Zena, awesome. If you can't handle that and you can't handle that turbulence of other people saying your stock sucks, other people saying your stock's going to zero, other people saying that you're an idiot, other people saying that you're going to lose all your money, other people saying that you're the R word. Literally, I've heard it all. I've heard it all with Tesla, with Onto Innovation, with Zeta, with Oscar, with FLNC, Fluence Energy. I hear it with everything because people are haters, but haters don't get paid. Haters just hate in their mother's basement. That's it. I don't care. Hate all you want. The more people hate on me for my stock picks, the more confident I am that they're right. That I'm right and they're wrong. Meaning, I was saying like they're right. The stock picks are right. But yeah, never marry a stock like Hims. Yeah, I didn't. I didn't. I'm bearish. I'm bearish on Hims overall, actually. What do I think about IREN under 50 now? Seems like a must buy. Yeah, I mean, I like IREN. I like IREN for the long term. Just again, like don't blow all your cash right away. Moving lower because Denmark rejected Trump's proposal to negotiate over Greenland. Yeah, more uncertainty. The someone was saying, you really think the market's going to go to like, 536 or 567, like another another like 5 to 10% lower from where we are right now? You really think that a war over Greenland could do that? And you're missing the point. You're missing the point. The point isn't about a war over Greenland. I don't think we're going to war with Greenland. Like they have 55,000 population. Like the point is uncertainty. Anytime the market starts going lower, anytime the market tops out, it's always around uncertainty. Typically not even around like the dead set data. The dead set data saying this is bad. We've seen inflation stay sticky. We've seen all these things happen and the markets keep going higher and higher and higher. It's not until uncertainty sets in. Uncertainty saying, oh, is the Fed going to raise rates? Is the Fed not going to lower rates? What's the GDP? What's this? What's that? Uncertainty. Uncertainty is always the root cause for the markets pulling back or chopping. Right now, there's a lot of uncertainty. And it's all this tariff stuff again. It's a fight between big brother US and little brother EU. over Greenland for national security reasons. And so Russia and China doesn't get it and so on and so forth. And the markets are almost red now, guys. If you've been here this whole time, the 2,407 of you, if you've been here consistently, you know who told you, hey, I don't buy this. Hey, we still don't look good. Hey, this could be a dead cat bounce. Hey, you should take profits. Hey, if you haven't raised that 15 to 30% cash yet, you probably should right now. And where are we right now? We went from over 1% up across all indexes now to break even basically and almost negative. It's noon. If we don't see these reaccelerating up to the upside and going bullish from here, and we see continued selling into end of day, get ready, guys, because that is bearish. There's one thing that's always super bearish with markets: a late day sell-off where it just keeps going. Because remember, big hedge funds come in end of day to buy up stocks. So if they can't even push stocks higher, not good. Why are you bearish on HIMS? Ronnie, your chart analysis is so accurate. Well played. Thanks, Spooky. Why am I bearish on HIMS? Well, you know what? I wouldn't even say I'm bearish on HIMS. I'm just neutral. Okay. When I look at HIMS and when I do conservative assumptions, now I still think it's a buy, but I'm not risking it. It's a falling knife. HIMS. And let me say this, guys. I love these live streams, by the way. We've been sitting here how long? Almost 3 hours. I love these live streams because I don't have to edit anything. I don't have to like plan out a video. I don't have to like anything. I could just sit here and talk with you guys and answer your guys' questions and do charts and all that stuff. Man, live streams might be the way to go for me. Okay. I like making videos too, but to be totally honest, like I'm an impromptu speaker. I don't read scripts. I don't plan videos. I have a topic and I talk about it. I want to talk about Zeta and how bullish I am. I just go in and talk about it. I don't read a script. I don't write a script. I don't have AI write a script. I don't do anything. I simply say, okay, I'm going to talk about Zeta and let me just tell you my bull thesis. That's what I like. So these are really awesome. It's great when there's two-way communication. Everybody can chip in from different point of views. Yeah, it's great. And we're still super small right now with like live streams and everything. So you guys literally get all of me. You know what I mean? It's not like I don't got like an Amit's live stream where he's got like 10,000 people watching him and he can't keep up with the chat log. You know, this is easy to keep up with the chat log with you guys. So one day it won't be, but I'll always do my best, you know. HIMS, it's getting close to that 25 key support. I did say in a post or something, I did think it would get down to like 25 support. And again, guys, simple support and resistance. Resistance back in 2021. Resistance again in 2024. Broke out of resistance, retested resistance, went on a run. Retested resistance again. Now this is support. Went on a run. Consolidated, broke down. Now coming back where? To the resistance, support, the S&R line, support and resistance line. This is it. 25 is the line in the sand. The line in the sand. At $25, this is where HIM should bounce. If it doesn't, that's not good. And the next spot would be like 20. Remember, you can always undershoot it, undercut it a little bit, then go. So yeah, maybe at like 25, I get looking at this company again. If we run the valuation though with a DCF, they're not going to be doing 76% revenue growth. They're going to drop down like 25% over the next 5 years. They went from 13% free cash flow margins down to 6%. That's not good. You want free cash flow margins to be going up. You want net margin to be going up. You want gross profit margins to be going up, not down. 53 is our current free cash flow rate. Growing at 25, we can give them a 30 terminal fair value. And you see there, just unloaded cash on Iren 50 and Ondas at 12. Nice, man. I don't understand the bull case for HIMS. So the bull case for HIMS is simply that they're building this nice and clean product for like millennial generations and lower, and that they have this nice UI, they have this nice app, and they deliver medications privately and easily right to your door. And they have a lot of subscribers, and they're continuing to grow their subscribers. If you want me to just break right to the point of why I'm not super bullish on HIMS anymore and why I'm more neutral, I'll give it to you in a couple bite-sized pieces. And again, I'm not showing my screen. Damn, man. Keep doing that. Sorry, guys. Let me see. So yeah, $38.90 for these projections, like I was saying, 27% upside. It's probably about 30% upside or more right now. But, and then this is the support and resistance line right here. Why am I neutral on HIMS? Why do I think it's not a super amazing, great opportunity right now? Simply put, if you look at the App Store, Rogaine, the hair loss stuff, they spun off their app and reformed it into like what HIMS is. They are beating HIMS in the App Store on the ranking system. They're beating HIMS and hers. So their own competitor that came after them, that copied them, is beating them. I don't like that. 2, Novo Nordisk whole thing, that was weird. But now Novo Nordisk has a pill version of a shot, which people rather take the pill than the shot. The pill is easier. Then they said, well, let's put the pill on Amazon Pharmacy, so then we get to deliver it right to your door with simplicity. And so you have a pill, easy, delivered right to your door, easy, where you already have Amazon subscription, easy, right? And so you're sitting there and you're saying, okay, Rose beating them out now. Their revenue, their net income have stagnated over the past few quarters. Their free cash flow margins have decreased. The CEO is putting side eyes on a post talking about a short squeeze. A lot of things are just not liked right now with this company. And Amazon being a competitor, especially in the GLP-1 space and in the pharmacy space and simplicity of delivery, is getting a lot easier with now Novo Nordisk going over there with their pill of the fat shot. And HIMS doesn't have that. All of these things make me neutral. If it gets to 25, it's going to be hard not to buy with their valuations, where they're going to be at. But yeah. Hey, Ron, by any chance you see a partnership with Mobileye and OpenAI? Probably. I mean, OpenAI partners with everybody, right? Hey, Ron, by chance do you see a partnership with Mobileye? Okay, you said again. Mobileye and OpenAI. Probably, yeah. Tehran says, you put $100 target for HIMS. Yes, I did. Yes, I did. So let me address this. So if I say something and I sit there and I say, hey, I'm super bullish on this company for these reasons, you just have to understand that things change. Like, I don't control a company. I don't control the stock market. I don't control anything. I control myself and my emotions and what I'm doing with my money. Too many people, when I say, and I get it, right? If you want to take it at face value, I said I put $100 price target on HIMS. We ran from like 30s, or actually I called it out down here at like the 20 range, and then we ran to like 72. Great returns. And then I called it out again here around 20 some, and then we ran again to 60 some, 90, 60, 70, like 2 great call outs and returns, right? But then I said, okay, well, I think HIMS is going to 100 plus. At the time, based on the numbers and based on everything I was seeing with the company, I did think they were going to 100 plus. Then a few bad quarters, free cash flow margins going down. Don't like the CEO commenting with side eyes on somebody saying a short squeeze is coming. Row beating them out in the App Store. NVO, Novo Nordisk going to Amazon with the fat pill. Simplicity. So the problem with people saying, well, you said this, you said that. Well, I said it months ago or even weeks ago. I don't know. The problem with that is things change, charts change, companies change, numbers change, competition changes, everything changes every single day. You don't understand that, then you don't understand the way the world works, because that's just the facts. Tomorrow I could be sick. The next day I could be fully healthy. Tomorrow I could die. Tomorrow I could live. After all that, you put a target, bro. Stocks to buy in 2026, not months ago. Okay, again, newer information. Row is beating them in the App Store. NVO just came to Amazon with a pill. Like, these are new things. They're doing 2 billion in revenue now at 6 billion market cap. I'm not saying they're not cheap. I just went over. I think they're cheap. I think they're undervalued. I do. I'm just saying I'm more neutral on the company than what I was before. Could I see them get it turned around? Yes. Am I saying that HIMS is going to zero? No. Brother, I'm not sitting here saying that HIMS is garbage. I'm not sitting here saying I don't see the whole peptides becoming I don't see it becoming a big thing. I do see it becoming a big thing, and I think they have a great product, and I think they have great membership growth still. I'm just saying there's a lot of things that have happened that have very much so diminished my bullishness around the company. And that's fair from what has happened. And then you have other companies like Zeta that are just performing at a very high level. And yeah, I'm super bullish on Zeta. And just look like, okay, like I'm super bullish on Zeta right now. If Zeta started just absolutely crapping the bed and just like doing all these weird things and just like the numbers turned to crap, what? I'm supposed to just be like, oh, it's okay. Like, whatever, man. It's fine. Like, come on, man. Like, things change every single day. Things change every single day. If you like to put it in black and white, fine. I said I think HIMS would go to $100 in 2026. Okay. Well, things are continuing to materialize where things are getting worse for the business and they're getting beat out by competition. They might not go to $100 in 2026, which makes me wrong. Which, okay, I'm wrong. I always admit when I'm wrong. That's investing. How about Oscar? I talked about Oscar earlier. I mean, it's a long-term investment, guys. I'm still super bullish on Oscar. Nothing shaking my bullishness. Yeah, they're down almost 7% today. I don't care. Consolidation down here, expansion. Consolidation up here. All anybody can talk about is ACA subsidies, which they actually don't even need to survive as a company, to thrive as a company. You're in the sweet spot. You've already had a washout. I'm going to continue to buy in here below 18. I think they're a buy anywhere in here, but let's just say below 18. I'm going to continue to buy in here. And then eventually, long term, they're going to continue to execute, in my opinion, based on what I'm seeing, based on the leadership, based on the numbers. These things can change, but I think they produce and they move up into the 30s eventually. Don't know when that is, but I'm super bullish on it. Doesn't mean you have to be bullish on it. If you steal my conviction, okay, but you better find some of your own conviction, because if you're buying at 20 and it goes to 15, 14, you're probably going to sell. Let's see. Do you see a risk of Elon Musk winning his lawsuit against OpenAI, and how would that affect Zeta's stock price? OpenAI is it's an entirely different business. I don't think that affects Zeta. They're just integrated with their products a little bit and trying to do some ads with them, but it's not like, I don't think it affects Zeta. Maybe it does in the stock price, but overall for the company, I don't think it affects them. I feel like you love cup and handles. I do love cup and handles. You know why I love cup and handles? Because they have the highest win rate. They have the highest win rate out of any charting pattern. So you should love cup and handles too. I also like Oscar. I like the CEO. Yeah, the CEO is great. Are you a fan of bank stocks such as SoFi and JP Morgan? Not really. They're just slower growth and a lot of, I don't know. SoFi, yes. JP Morgan and the others, no. And here's what I'll say about SoFi. Okay. If you want a good buying opportunity, I think you're about to get one on SoFi, by the way. So again, where do I think overall markets are going? I think they're going to have a pullback or correction. Consolidation and then breakdown. Consolidation, you haven't been able to break over 30s, 32. You're in this consolidation range. You failed to hold now the 21 EMA. I think you're going to come down to like this 18, 19 range. Again, that was in the crazy prices, crazy stock prices and watch list items. It could happen. All this resistance, it can't break through. If markets pull back, SoFi's looking very weak. Matrix is down. You're flushing out right now. You're just now getting the sweet spot, so you can come down in here a little bit more, pushing down to $20 range. So I'd be a big buyer at SoFi in the $20 range. If we run valuation on this, we load the boat at 18. No, yeah, I'm probably loading the boat at 18. Big time. We should also wait for it to like create support, stable out, so on and so forth. Let's see. SoFi. EPS, current 0.51. Let's see analyst projections. 0.37 for 2025. This is probably just on a trailing 12-month basis. It's 0.51. So let's just go with the actual year of 0.37. EPS growth rate, it's been 44, 35, 27 over last year, 5% implied. They're expecting 57, 37, 11, 21 from analyst. So let's just go with a conservative, I want to say like 25% being conservative. And then let's go with a multiple of, now see, a 46 multiple. They're not going to keep this multiple. This is a bank stock. They're not going to keep this multiple. I think they can, with a 25% revenue growth, I think like a 25 or 30 multiple is more fair. So let's just go with a 30. And we're 17% overvalued. But this is very conservative. I will say that. And let's say they grow at 30% EPS growth rate, 30 term target PE, then they're basically fair valued right now. But if they go down to $18 per share, right? They get down to $20 or $18 per share, then they're going to be what? They're going to be about 20 to 30% undervalued, which is a great time to be buying. Yeah, Mobileye earnings tomorrow, pre-market. Yep. I'll be up early. I can't cover it sadly because I have a I have a well, actually, I'll be on Wolf Financial. I'll be talking with them on a Spaces tomorrow morning, and then I have my chiropractor appointment, and then we have our first podcast episode tomorrow. So me and Nick. So yeah, I'll be up for it. I'll be up at like 6:30 a.m. before, probably when they drop their numbers or something. So we'll see. We'll see how it goes. I'm excited. I'm excited for it. What are markets doing? Had a small bounce, but still down. Yeah, guys. Wow. Bitcoin. Wow. I mean, come on, guys. If you've been here, like, did I not drop the alpha for you guys talking about all this and talking about stocks probably pulling back down? So yeah, now you're ending. Now you're going into the rest of the day bearish. So yeah. So if I earnings in 9 days, I think the Brian Johnson type stuff can spread a lot with time. And once it becomes like a normal trend, a company like Hims can benefit a lot. Yeah. Again, I said I was bearish on Hims. I misspoke. I'm not bearish on Hims. I'm just neutral. How do we watch listen tomorrow? Um so tomorrow I'll be on with Wolf Financial. I'll repost that tomorrow. We're gonna be talking about we're gonna be going live 7 a.m. Eastern time. We're hitting the EU markets. So we'll be there 7 a.m. on Spaces. You can check that on X Spaces. And then I'll be posting about earnings on X. And then I my appointment. Maybe we do a lunchtime live stream tomorrow. Maybe. We'll see. And then we have our podcast tomorrow live at 5 p.m. Eastern. So, can you also do this analysis with Oddity? Yeah, man, I'm sorry. I keep on getting sidetracked. You keep on asking about Oddity. Same here, interested in seeing your Oddity. Yeah, let's do it, guys. I'm sorry. So, Oddity, this is really good here. Look at this key support level. Key support. I'm going to get in the fundamentals too. Key support level, right? Bounced here, support multiple times. Now it's right back here. If this breaks, which it shouldn't, but if it does, you got 24 low. If we look at Oddity, let's look at some charts. Also, S&P 500 inclusion potential is April is a catalyst for the stock. Yeah, 100%, 100%. My average in SoFi is $28.01 or 28.10. Long term, I am concerned, but trying to ignore the noise and positives. They'll continue to deliver big growth. Yeah, over time, I think you're going to be just fine. I would try to, if they continue to fall lower, I would try to lower your cost basis by dollar cost averaging into the company. Yeah. Or maybe around that $18-$20 range that we pointed out, you try to take a big like stab with some cash to try to really lower that cost basis. Yeah. I love this, guys. This is awesome. I love talking to you guys. This is great. I love live streaming. I should have been doing more of this for the past year. All right, Oddity. Oddity. Let's see. I'm gonna look at it here. I sort of know what they do, but I want to get like the legit. Oddity Technology is a pioneering consumer technology firm headquartered in Tel Aviv, Israel. Man, there's like, I'm not gonna go there. There's a ton of companies based in Israel that end up doing really well. It seems over time, where there's small cap startups. There's so many startups in Israel. It's great. At the forefront of merging beauty and wellness with cutting edge artificial intelligence. So it's a company that uses artificial intelligence. They're a SaaS company, I'm guessing, subscription as a service, and bridging between AI and beauty products. By leveraging advanced data analytics, the company crafts highly personalized products, okay, and services that only enhance customer engagement, but also foster deep brand loyalty. Oddity's innovative solutions position it as a leader in the burgeoning. Sorry, guys, I only have a bachelor's degree in the burgeoning digital consumer market, making it an attractive investment opportunity for institutional investors focused on a transformative trend within the beauty sector. As the company continues to adapt and grow, it is well equipped to capitalize on emerging markets. Sometimes I wish the stock just goes to where it wants to go in one big drop and not bleed slowly over months, so we can just DCA and get done with. Yeah, man, you and me both. I have $20,000 position in them and have about 5,000 cash. If they get to 20, I will go in big, I think. What should drop my average, but not a huge amount, unfortunately? Yes. Didn't anticipate a huge drop like this, to be honest. Thought it was bouncing between 28 and 30. Yeah, very understandable, man. Very understandable. It's look, it's not your fault. Look, we just learn and you can journal about it. You can understand what went right, what went wrong, right? You're in a great company, just bad timing. That happens. It's okay. What are you gonna do about it? What are you learning from that? Right? So what I take away from it and what I would tell you from my feedback is simply, hey, you know, you went in with 20K, you probably should have just spread that out, right? Draw some levels on a chart at support and resistance lines, control those emotions, reel them back in, or simply say, I want a 20K position in SoFi, but I don't want to buy at the top. I don't want to buy in all right now because I don't know where it's going to go. Even though I feel it's going to go higher, I don't know. So you simply say, I have 20K. I want to build this position in SoFi. So you either sell cash secured puts underneath for 1 month out, lower than where the stock is, and you collect premium while you wait for your stock to, while you wait to get the stock assigned to you. Or you simply say, okay, 20,000 divided by 6 months, 12 months, 2 years, however long you want to be decent dollar cost averaging into this company, and you start with like a starter position of like 2,500, 5,000, and then you just continuously dollar cost average every week, every month with the rest of that 20K. That's the best way to do it. Especially if you don't know like charting as well or something and like key levels and all that kind of stuff. All right, Oddity. Yeah, 2 billion market cap, enterprise value 2 billion, revenue of 780 million. What do you think about Adobe now? I still like Adobe for the long term. I don't think they're everything's up and to the right. I think it's just a sentiment thing, just like Google. Yeah, definitely learning. Cheers, though. Of course, man. We're all learning. I've been in the markets for over 10 years. I still learn every single day. It's a great thing about it. Thoughts on Microsoft dropping big, waiting for 430, 420? Yeah, all Mag 7 companies have been dropping a lot. A lot. All right, let's see. So we know what they do. I'd have to like pull up Oddity and like see their website and see like how they're doing like AI with makeup and everything, you know? And just yeah, I just don't know. Anyways, let's look at quarterly. A little too choppy. Let's look at trailing 12 month. Okay, so don't love it. I want to be seeing profit margins, operating margins, net margins, free cash flow margins up and to the right. We hit a peak and then have been down. Still, though, they're good operating 15, 14, 13%. Revenues up and to the right, net income up and then stable. Gross and operating margins up and to the right. And we're on valuesnapshot.io, by the way. And also, again, so we have more friends in here so we can grow this live stream. Please hit the like button, share with a friend, and subscribe or follow for more, guys. That's all I ask for my time here. And if you do want more information, more due diligence, more analysis on investing or trading, I also have discords for that as well. Link is in the bio. EBITDA continuing to go up to the right. Cash flow was really, really solid, and then it's been stagnating and declining the last 3 trailing 12-month time periods. Balance sheet's good, 1.1 billion in total assets, 728 million in liabilities. Cash to debt is pretty much in line with each other. Shares outstanding, not too much dilution. That's pretty solid. And EPS is continuing to climb up to $1.76 right now. Pretty solid. Revenue per share climbing. Free cash flow per share declining, like we know. Return on assets is at its lowest it's been since 2023. That's not the greatest. Same thing with return on equity. So to me, it looks like things have been like there's been a hiccup in the business model over the past basically in 2025 there was a hiccup in the business model, and that's probably why you're seeing stock price go from, look at this, ready, June 2025, and it's had this just meltdown from 80 to 32, almost cut in a third, right? The reason you're probably seeing that is because since 2024, margins hit a peak in early 2025, and then since then, declining margins, inline net margins, um, declining cash flow. You know what I mean? I have 2 boys, 5 and 4. It's hard to concentrate, and this stream is calm and gentle, educational, and I appreciate how interactive you are. It's really cool and exciting. Awesome, man. Thanks for the feedback. I'm glad it's like that. Um, don't worry, I have a 1 and a 3-year-old myself, 2 boys as well. They will sometimes come and bang on my door, my French doors, and be disruptive. And sometimes I'll let them in because it's just not worth fighting them on it. And so they'll be here, and they'll be they'll be with us sometimes. It is what it is, right? That's part of having kids. So calm and gentle. Sometimes it won't be, but that's okay, right? Not gonna lie, my overall portfolio is red. It's a newer portfolio, started at the start of September, got 1 month of bull before that October, November stuff. Yeah, man, that's tough, that's tough. Um, look, I mean, you have like my matrix indicator and like my indicator suite with the matrix and the flow, like it was saying like, hey, October is like, once October hit, it kind of told us like, hey, things are not okay anymore. It's the same thing that happened December of 2024. It sat there and said, things are not okay anymore. We're not in this just like up and up and up bull market. It's time that we're consolidating before the next move up, or we're going to see a pullback or correction. And that's, we saw a pullback in November. Now we're seeing more bearishness. I don't know. But you really just need to, and the thing is, there's always great opportunities. There's always undervalued stocks. It's just important, like when we get to these points where we're super high, it's important that we keep around 15 to 30% cash, because you just never know when that 10% pullback is going to happen or something. What's up, Sam? Thanks for stopping in, man. Appreciate that. Hope you're doing well. Market's been crazy. Where are we at? So markets went from over 1% higher. Now they're down, right? Now they're down to almost went negative, but now they're holding on. Bitcoin's bouncing back a little bit. Again, I think it really depends on what happens the rest of the day today. Are we going to see a move back to the highs? That would be bullish for markets. Or are we going to see continued move down? Or I would say even if we held where we're at right now, yeah, it's going to be tough. It's pretty bearish from where we were. Yeah, I'm overall red, but I have been able to raise 40% cash. There you go, man. Look, having a benchmark of 15 to 30% cash, if you have more than that, if you're comfortable with holding more than that, that's really, really solid, really, really great. So again, back to Oddity. The reason they've had this plummet is simply because margins have compressed. They've come down. Revenues are still going higher, but they're making more money, but their revenues or their margins are going down. So does that mean they're spending more money on trying to get more revenue? That's never good, right? So let's actually just look at a DCF model, EPS model, and let's see if they're undervalued or not. So trailing 12-month revenue growth rate. I don't think they're going to be growing at 43%. They probably grow at, let's give them a conservative 20% revenue growth rate over the next 5 years. Free cash flow margin rates, they have continued to come down. So I'm going to stick with 13 where they're at right now. Let's hope and say that they, level out here. Thanks for all you do. I appreciate that, Gravy. Gravy salad. Nice. Terminal multiple, they're currently at a 20, so we'll just leave that here. So look, if you believe that Oddity is going to continue to grow 20% revenue growth over the next 5 years, 13% margin rates are going to stay here, or even better, they go higher, and they're not going to continue to decline like they have been since 1 year ago, and they keep a 20 terminal multiple free cash flow, then you're looking at 134% upside and $82 intrinsic value. Isn't that kind of funny? Because that's where they peaked, basically right around $80. So if you believe that, right, you're sitting here and you have a great buying opportunity on your hands. Now, let's look at what Seeking Alpha says. Let's see, right, what are their analyst projections? So they're saying, yeah, 20% revenue growth for the next 5 years, basically. So we can actually go like, I'd say 18. Let's just draw it in the middle. 18%. But let's be more conservative. Let's say, right, they're seeing this deceleration in free cash flow margin. Let's say they continue and they get down to 10% average over the next 10 years. And then let's say because they're not growing 20% plus, let's give them a conservative 15 terminal free cash flow. Well, they're still a buy. 32%, $35 current price, 40, well, now it's 34. And then intrinsic value is $46.80. So make sure my mic's on. Sometimes I tap it and I freaking mute myself. So yeah, this is what I love to do. I love to see, like, conservatively, if I put in super conservative assumptions, say like things keep on going bad, like base case or bear case, is the company still going to be good? And this says yes. Now let's look at an EPS basis. They're currently doing $2.14 of EPS. Now, are they actually net income positive? The one thing I don't like about Seeking Alpha is they show non-GAAP EPS. I don't love that. Nope, they should be, yeah, they're EPS positive. Let's see. Yep. Yeah, they're EPS positive. Okay, cool. So DCF. That's not what I had. I had 20. No, wait, 18, 10, 15. Okay, so 32% undervalued. EPS, $2.40. Trailing 12-month, but they're currently doing 214. So let's just put that in there. EPS growth rate, let's put them at 20. They expect like low teens. Let's just put it at 12. 12, and then I think a terminal PE would be like 15 is pretty solid. And you're basically in line. And here's what I'll tell you. What I've learned from my 10 years of investing and trading is I love looking at a DCF model. I think it will really help you find gems in great undervalued companies before anybody else. But Wall Street values companies based on EPS growth rates, current EPS, and an EPS valuation model. So them being at $35 fair value based on these assumptions makes sense. Why they're not getting super bid up. Now, if they grow EPS growth by 20 and they get a 20 multiple, then it's severely undervalued. And then Wall Street's going to bid this up to $66. That's just how it works. So yeah, we'll go 15 there and then 15 here. So 13% undervalued, $40 is fair value, being very conservative. Rule of 40, like I said, they're doing about 18. Profit margins are at about 13, so they don't have the greatest rule of 40 number. And then PEG ratio, 20 PE, and they're doing about, we said 18, 15. Yeah, so they're fair value. So if we just look at everything together, go to compare all, and you have a $34 fair value or price, strong buy overall rating, plus 22% average upside, DCF model of $46.80, 32% upside. That's an 18% growth rate per year. Fair value on EPS is $40. Rule of 40 and PEG ratio aren't the best. So if you're looking at this, if you think DCF is going to carry them higher, then they're severely undervalued. If you think EPS is the only way they're going to move higher in their stock price, then you don't have too much room for, you don't have too much margin of safety as of right now. So what are markets doing? Markets are rebound a little bit more. Thank you for the great analysis. That's exactly what I needed. Of course, man. All right. Recommendations on best way to learn technicals for long-term investors. Find it difficult to time entries. I have a couple videos on my YouTube. I have I have an investing 101. Maybe I should do a live stream around technicals, or maybe a video. Probably a live stream would be best so people can rewatch it. What do you guys think? A live stream around technicals, like basic technical analysis? We won't get into my indicators or anything like that. I'll just use basic like moving averages, EMAs, anchor volume profile, support and resistance lines. I do have a lot of that in my community as well. But I think, yeah, doing like a in-depth technical analysis video. Would you guys like that? Would you guys want to see something like that for a live stream? Thank you. Really appreciate your analysis. Of course, man. A live stream would be great. Awesome. Yeah. I'll get one scheduled up, get it out there, make sure everybody knows, and then we can do that. I would watch. All right. Yeah. So a lot of you guys are coming alive. A lot of you guys want to see that. All right, cool. Thanks for letting me know. Sweet. Make sure you like the video. Make sure you share it if you have any friends that want to see this stuff, and then make sure you subscribe and follow also. That way, whenever I do post about the technical analysis video live, then you guys got that, so you don't miss it. Thoughts on this portfolio for 5 years from now? Cypher, Uber, HIMS, Zeta, NVIDIA, AMD, Meta, SoFi, Duolingo. So I'm going to bring up this real quick. One second. Now this isn't like the holy grail. This is just a nice little comparison tool, okay? Also show this. So I shared this. If you want to know charting patterns, like this right here, if you come over to X at the RonnieV show and just, I don't know, search my little search icon up here and just type in like charting made simple. And then you should get this post right here. This is a really good like top charts pattern. If you want to know like how charts work, that you can just like literally copy, download, paste, whatever. So if you want that, I can't post it in the chat here. So yeah, looking forward to how to be a dad series. Yeah, that'd be good. Just need my son to come in here a little bit more.
All right, here it is. So stocks a portfolio gauge. So around, again, this is just a gauge, you know, 65 comments. people people think, oh man, look, everything's not black and white, okay? Everything's not black and white. If I say this, I'm just saying a gauge. Look, this is what I feel like is a good portfolio sizing for somebody in their teens to, so like 18 or whenever you start investing, 16. I know I have a 16 or 15-year-old on here watching me. Teens to probably like your 40s. This is a good high conviction style portfolio. You don't go in here for your, like, you don't go in here with 25K and have 10 investments, right? Because how are you going to find 10 stocks that you're like super highly convicted in for the long term, but also stretch that 25K and make it go as far as it can? With 25K, with like 1 to 3 stocks, no, honestly, you don't, probably shouldn't have one stock, to be totally honest. I did that with Tesla for a little bit and it really worked out for me, but I would never do that now at 32. 1 to 3 stocks, so probably like 3. 25K. If you're right on at least like one of them or two of them and they go really well, you can make a lot of money with a small amount of money. So being in high convicted plays. Now, everybody's different, everybody's risk management's different. I'm a believer that the younger you are, the more risk you should take, meaning fewer positions with your money. Because you're younger, you have more time to recoup, play out, learn, get better. When you're older, 30s, 40s, 50s, 60s, 70s, like really for 50 plus, having 3 stocks is dumb. Even like if you had 2 million in 13 to 15 stocks, I think that's pretty solid, even if you're in your 50s plus. But to you, you might want 20 stocks. Now, I'm a strong believer, and there's research around 20 stocks is like a cap. They've done studies where it says if you have more than 20 stocks, you kind of like hit an inflection point where you should honestly just own VOO, the SP 500, something like that. That tracks the SP 500 like VOO, because you're going to get 8 to 10% return on your money. You don't have to track 20 stocks. You don't have to listen to earnings call for 20 stocks. You don't have to do any of that. You simply can just invest and not have to worry about anything, not have to research anything, right? Sorry, I lost my train of thought there. So 20 stocks should be like the maximum, in my opinion, for any portfolio. But here's a good gauge, right? If you want a high conviction stock portfolio. So you gave me 1, 2, 3, 4, 5, 6, 7, 8, 9. You give me 9 stocks. So that means you would have to have like 500K or more, based on this gauge. And based like your dimensions obviously would be different based on you. But yeah, and at the end of the day, if you feel most comfortable holding 10 stocks, then hold 10 stocks. Okay. I'm just showing you this as kind of like a little gauge. Like, use it as a gauge, remold it, fix it to what you want. Okay. So let's see. Hey Ron, I work for UPS. Do you see any value owning this stock? I'm 21. No. So I'm not going to tell you what to do. Oh, markets came back down. DGen Andy, if I was 21 years old, think of the names I'm in, like Zeta and Oscar and Mobileye. What do they all have in common? They're all AI related. They're all going to disrupt bigger players. So, if you're younger, you should take more risk. Doesn't mean you can't own value companies or dividend companies, but I'll just be totally honest. Focusing on dividends, like if you don't have $1 million and you're focusing on dividends, it's tough. Or you're not older, like 40s plus, and focusing on dividends, it just doesn't make sense to me. Younger, take more risk, do more due diligence, find stocks you're highly convicted in, buy them, hold. Look at Nvidia, look at Palantir, look at Meta at 88, look at all these companies, look at Robinhood, look at SoFi, look at the screenshot on X. What do you see? You see people, look at me buying Tesla for like 30K and turning it into 300K. What do you see? You see that young people learn to invest, learn how to read a simple chart, learn how to understand and have conviction in a company. And then you take that, you invest in that, you bet on yourself, and you're going to be right more than you're wrong because you're doing it the right way. You're not doing it off of hype. You're not doing it based off because Johnny said so on X or X influencer or I say it. You're doing it because you found conviction in a stock. I found it in Tesla. I found it in Palantir. I found it in Nvidia, and they all paid big. They all paid big. The biggest thing they had in common, game-changing companies. I even missed out on Robinhood, and that should just show you that you don't have to hit every home run. I saw Robinhood at 19. I saw my discounted cash flow model. I saw that based on free cash flow, holy crap, it's a screaming buy at 19. I didn't pull the trigger, mainly because of the whole GameStop saga crap. I wish I could have looked past that because then I would have been in Robinhood and made like a 10x. It's okay. You're not going to hit every home run. Unfortunately, my headphones broke today because of my naughty cat. So I can't hear your voice. It'd be great if you could respond through chat instead. Yeah. Full port ODTE, got it. Yeah. No. I think if I only go for 4 to 5 stocks today, I'll go for Amazon, Zeta, Nebius, Iren, Cypher, AMD. Solid list. Exactly. The retail obvious plays don't come often. No, they don't. I really believe Zeta is one of them. I do too, man. I do too. And it's exactly why, like, I hope this market does have this pullback and correction because I would love Zeta to come nice. Yes. Look, I like Zeta being red. Look, I get people want to make money quick on this thing, but like, guys, I want Zeta at $16 and $15 again because I want to buy stupid cheap leaps. Like, my conviction only grows. If we get it lower, 15, 16, 17, 18, I'm buying more and more and more leaps for 2028. Because by 2028, this company is going to be, in my opinion, based on every financial valuation metric I have, based on my conviction in the company, it's going to be minimally $30 plus, which makes my leaps worth a lot more money. I think it'll be worth way more though. It's only a $5 billion. It's not even it's $4.86 billion market cap. And they're just completely changing the marketing game. They're flipping it on its head. Marketing is huge. Marketing is big and is only going to grow and is massive for everything. And they're about to flip marketing and turn ads on and LLMs. Yeah, sure. Everybody's like, ChatGPT, I hate you. Why are you doing this? But everybody's going to be doing it. Gemini's going to do it. Anthropic's going to do it. Meta's going to do it. Grok's going to do it. Everybody's going to do it. Everybody's going to turn on gathering your data if it's not already through LLMs, and they're going to be showing you ads based on what you're putting in there. And guess who's first to the party? Zeta. Zeta's first. If it doesn't go lower, would you buy now if you only had a couple shares? If I only had a couple shares, just DCA. I hate being like, yeah, I would buy here, and then you go buy 100 shares, or you buy a lot of, like, you use up a lot of the cash that you have here at 19 and it goes to 16. And then next month you're like, Ronnie, what the heck, man? You said it was a great buy here, and now it's at 16. Happens. Like, understanding where the stock's going to go short term is very, very difficult. Very, very difficult. It could bounce right here off the 21 EMA, or it could keep falling down to $15. Okay, look at the overall stock market like this, and this is what I teach people in my Discord for investing or trading. You have to look at the overall stock market like this. You have the markets up here. The markets encompass the entire, like the indexes, they encompass the entire market. This is like top-down approach. You have the markets. What are the markets doing? What are the markets saying right now? I showed you earlier, the markets are screaming overextended and screaming that we might be having a pullback or correction here soon. If it does reaccelerate higher, it's still extended. So the overall markets are telling you, doesn't look so great. And then what do we do next? Then we go into the sectors and themes. Well, what are the sectors and themes telling you? Well, it's all AI, obviously. Right now, if you go shorter term, it's space, drones, materials, uh, defense, right? And then after that, you go down into the individual stocks. So individual stocks are last. Individual stocks are always going to move based off of themes and sectors. If themes and sectors are bearish, like SaaS companies, Zeta, believe it or not, is lumped into a SaaS company, which is yes and no. It's stupid. So stocks are always going to move with one, the overall sectors and ETF movement, and then two, the overall markets movements. If overall markets go down, your stocks will go down. If overall themes and sectors go down, your stocks will go down. Why? Why? Because some Johnny on X is selling 5 shares of Zeta? No, because the overall market of stocks in the stock market is hedge funds, are ETFs, are companies like Vanguard who control millions and millions of people's money through Roth IRAs, through 401ks, all of that. So when they come in and they say this sector sucks, we're out, they're selling billions and trillions of dollars in that sector and theme. So your stock in that sector and theme goes down. When they come out and overall the world, or people in America, whatever, say the QQQ sucks, IWM's great, they're selling at a QQQ. Well, if your stock's in the QQQ, your stock's going to go down, like we've seen with Mag 7, Meta, NVIDIA, Amazon, so on and so forth. They've been going down. Microsoft, Apple. You see, just because you have a great stock, it's undervalued, it has a great setup, it's still indicative, it's still reliant on theme and sector, overall market. So how do you capitalize? How we talked about earlier. You wait for overall market to be in the dumps, like in 2020 crash, like in Tariff-geddon back in April 2025, like the bear market. Wait for it to be in the dumps. Already have these companies picked out on a watch list. That's how you get Palantir at $5. That's how you get freaking Hims at $2. That's how you get these companies at stupid prices. Stupid prices. So overall markets in the dumps, which means overall sectors are in the dumps, which means overall stocks are in the dumps, like way more though. Because if like markets are in the dumps, then sectors are in the dumps. If the sectors are in the dumps, Your stocks are in the dumps. Like they're in the freaking doghouse. They're buried. So that's how it works, guys. It doesn't have to be super complicated. So yeah, I want Zeta lower. I want it down here. 15, 16, 17, I don't care. Give me it lower. Give me it lower because I know overall where this thing's going based on fundamentals and everything. Do I have a price target for Zeta end of year? So I'll stick true to what I said, but I think it's absolutely crazy now, but I said it. So I said $70 for Zeta in 2026. I'll just be totally honest. The likelihood of that happening is it's very, 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 very unlikely that Zeta sees $70. I think a more conservative price target would be like 40s. I said 70 because I was just like looking at it and I did a bull assumption on Zeta and like it just came back like at $70 fair value right now. So I was like, well, if my bull target is $70 fair value right now, then a profit target of $70 is solid. But that's not how things work again. And that's based off discounted cash flow model. And Wall Street doesn't, honestly, they don't give too much crap about discounted cash flow model. I do because it lets me understand the trajectory of a company and free cash flows before they become net income positive and go on this super big run. Yeah, if it goes from 40, that's great. I mean, that's over double. That's amazing. And long term, I think it's going a lot higher, obviously. So yeah, like this year, guys, they're going to grow 35% this year. Well, let's say over the next 5 years, average, they grow 25%. They're doing 12.7% free cash flow margins. They've grown 6 to 8 to 9 to 13. Right now, on a quarterly trailing 12-month basis, they're doing 14%. So let's say they get to, let's just say they keep that going. So they grow like 2% every year. So 14 to 16 to 18 to 20, right? So within the next 5 years, that would give them an average of like 18% free cash flow margin rate over the next 5 years. And then guys, they're currently have a 32 price to free cash flow multiple. Growing at 25%, I think that's fair. Let's just bump it down to 30 just to be, a little bit more. Guys, $64 is the fair value, not yesterday, not tomorrow, today. Do you believe they can grow 25% free cash flow? Do you think they can grow 25% more, or do you believe they can grow revenue at 25% over the next 5 years? I do. Do you believe they can expand their revenue or their free cash flow margins to 18% when they're currently doing 14.7%? I do. Do you think they should have a 30 terminal value if they're doing these numbers? Yes, I do. 10% discount rate. That's fair. 5-year target. 218%. Literally over a 3x from today. So that's why I said $70 target. But if you look at EPS, right, and sit there and say, okay, well, this is what they mostly value it on. I think they're going to get to 5 cents of EPS. And actually, I think they would get to 10 cents of EPS net income for 2026. And then you'd be looking at an EPS growth rate probably about pretty high, say 40 to 60%, would just go 50%. And then your forward PE would be like 25, growing at, honestly, it should be 30. I'll leave it at 25. Growing there. And it says it's overvalued because this EPS growth rate is small for a company just becoming profitable. So right now it's saying it's overvalued. But again, let's look at what actually analysts say, because like I said, I'm just pulling numbers out of my butt up there. So there you go. They think Zeta, well, this is non-GAAP, but you can take non-GAAP. Let's just take non-GAAP. So 67 cents growing like 20% per year. 0.67, right? Yeah. It's 0.67 growing 20% per year. With that, then there you go. Undervalued. Should be a $25.92 stock. If you think it should get a 30 PE, if you think they grow 25%, then you start really expanding $38 fair value from $20, 90% upside, 25% CAGR. So yeah, where do I think Zeta like price target wise? I would say like around $40 or more for 2026 if people in Wall Street catch on, if they get this lawsuit behind them, if they flip positive on EPS, which I think they will. If it doesn't go lower, would you buy now if you have a couple shares? Yeah, I would just DCA. Where do you think Zeta bottoms if we actually get a full correction? That's a tough one, man. That's a tough one because people are just gonna say, Zeta is gonna get hit because it's marketing, blah 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 blah. Dude, that's a tough one. Previous support was right there at 11. And you got this support at 13.50. So could Zeta go to $11? Yeah. Could it get cut in half? Yes, it could. Could it go to 13? Yes. Could it go to 15? Yes. I'm just telling you. I know it sounds scary, but like Zeta at $11, based on what they're going to be doing going forward, even if the numbers get hit a little bit due to a recession or something like that, just understanding that they'll reaccelerate and spin back up, it would be like buying Palantir at $5. I'm not exaggerating. I'm not exaggerating. That is my opinion, but that's what I believe. So, do you like Pagaya over D local as financials play? I like them both equally, to be totally honest. I actually like D local a little bit more, but yeah. You think Zeta can become a multi-bagger in 5 years? 100%. 100%. I just showed you right there. That's a bull case. That's this year for the DCF. That's this year at 63. So that's a 3x from here. Should be fair value today based on DCF. Imagine Zeta becomes the next app 11. It could, dude. I'm so confident on this company. Yeah. All right, guys. Holy, almost 4 hours. Let's go. Love it. I love it. My voice doesn't love it. But amazing stream. Check the markets. They're still way off where they were this morning. Let's check a 15-minute. Let's check an hour. So yeah, we were up here. No, an hour's too long. Jeez, come on. Great stream. I appreciate it, man. Where are we at here? Okay, yeah. So yeah, ran up and then we came back. But we could have just been making a higher low off this bottom. So there is that. But we don't know. Like I said, markets keep dumping rest of the day, then that's very, very bearish. If markets stay here and chop sideways for the rest of the day, I still think that's bearish from where we were today. If markets rebound and continue going higher and push higher and make a move in the end of the day, I think that's bullish for overall markets, and it probably continues for the week. But very, very difficult. Very, very difficult. I just zoom out to the weekly, and like I said, I look at my indicators and look at things, and they're just not that great right now. So I don't know why anybody would be like deploying a ton of cash right now. I just think like your odds are just not that great for return on investment at these levels, at these prices, based on the indicators, based on everything we're seeing. So I appreciate it. Florian, thanks for the live, man. Of course, Sam, great stream, brother. Thank you, man. Thanks for tuning in. Appreciate you. Is HIM's PE justified? I don't think based off current revenues and what they're doing right now. But all right, guys, appreciate you. Love you all. Maybe I'm with Wolf tomorrow morning at 7 a.m. Maybe a lunch stream. I don't know yet because we got Mobileye earnings tomorrow morning. I'll be covering that. Got a chiropractor appointment in the morning, so I'll have that. And then podcast, me and Wealthmatica at 5 p.m. We'll be doing it live, and then we'll spin out the audio across everywhere. Appreciate you guys all. Hit that like button, share this video with somebody, subscribe and follow for more. It helps me immensely, helps bring more friends in the live stream so we can have more banter back and forth, and expect more of these going forward. Thank you all. Love you all. Continue to grind, continue to learn, continue to get better every single day, and hope you guys have a great and fabulous rest of your days and weeks. I'll catch you guys tomorrow. If you